Hi, everyone. Thank you and welcome to Tax Training 2022. We've got a small group with us today, but today we're going to be covering a variety of topics, talking about tax law, talking about certification questions, just explaining what VITA is a little bit. Um, yeah, it should be a good day. And if you're watching this recording, what I would say is feel free to pause the recording, answer some of these questions for yourself, think through some things, and we'll try to put timestamps in the video so you can click through and get to certain parts a little faster. Um, but with that, let me introduce myself, and then I'll give our volunteer that's on the call a chance to introduce herself in just a second as well. So I'm Darren Liddell. I am one of the Catalyst Miami team members, and I've been doing taxes for the last about 12 years. Started doing taxes when I was a student in college, and a professor of mine said, you can either learn to do taxes or write a 25-page paper. So I, of course, learned to do taxes and haven't stopped since then. And the class also had a service learning requirement where we had to learn to do taxes and help people through the VITA program. And that's exactly what this is. And so I've been doing VITA for about 12 years, and I'll tell you all a bit more about what VITA is and what it means. And we'll dive into the nitty gritty and learn some good things today. But with that, I want to give our volunteer a chance to introduce herself. Kay, you mind coming off mute and just saying your name, why you're interested in tax volunteering, uh, and maybe where you live, area kind of thing.
Good morning. My name is Kashiwa Brown, and I'm interested in tax training because I believe the big companies they charge entirely too much. And I'm born and raised in Miami. I live in Miami still.
Born and raised, that's awesome. Cool. Thank you, Kay. So cool, y'all. So Kay is going to be on and off mute today, as she has some young ones running around in the background. But Kay, if you have questions, please feel free to stop me because I feel like if you have a question, the other folks that are on the call that are listening to the recording may also have it, and it can kind of stop me. You can be like, "You just said a bunch of stuff. I don't know what that means." So all this to say, like, feel free to stop me. And then there may be some other folks joining the call throughout the day. A few other folks RSVP but aren't here just yet, so they'll probably be here closer to 30 minutes or so from now. As y'all know, Miami time is very real. So with that, let me chat y'all up a bit about what we're going to be covering in the session today. So the first thing we're going to do is an introduction to VITA. We're going to overview VITA for a few minutes, talk about what it means, talk about some important resources that you'll need to know and that are really important to the way that VITA works, and for the way that VITA works and how and just kind of the basics of what you need to know. We're gonna go through some certification tests together. So we'll spend a little bit of time looking at the tests, getting the answers, talking about why the answers are what they are. We'll go through the intake and interview sheet to make sure that you understand what the client intake process is like, and what specifically we do at Catalyst Miami as volunteers, and both on the tax volunteer side and the intake coordinator side. And I'll explain what those roles are in just a bit. We're also going to talk a bit about setting up practice lab accounts and getting in to take that exam that we've got to take. And then depending on how far we'll get, we'll also talk about filing statuses, dependency exemptions, why different types of income that go on tax returns. And then we'll do some certification tests at the end of the day and make sure folks have what they need to do that. And then we'll see. We may get a little bit further. We may get not get quite as far. We'll see how it goes today. So with that, let me start off with some basics. So this is a virtual training. It's all on Zoom. And the way that Catalyst Miami does taxes during tax season is also completely on Zoom, which means it's virtual. Many of our partner sites, such as branches, let folks come in to do drop-off taxes or in-person taxes. But the model that we're trying to adapt, or we've been doing a lot for the last year at Catalyst, is all virtual. So the benefits of that are you can do taxes from your home. We'll make sure that you get client documents securely. We'll make sure that you have a way to connect with clients. We also make sure that you have a way to step out of a meeting, ask a site coordinator for advice or questions, and then go back in and talk with the client. Everything's meant to be private and confidential. That's really, really important with VITA. We really want to make sure that clients feel comfortable and that their information is protected, and that you feel comfortable as a volunteer and that you feel like you can always come to a staff member or another volunteer to ask a question to make sure you have what you need to feel like you're doing a good job. For VITA, and we'll talk about quality set requirements and what's required, but an important thing to remember is just that at VITA, there's a double check system built into everything we do. So if you're the tax preparer, you'll prepare the return, and then there'll be someone called a quality reviewer that'll come behind you, look at your work, double check it, and just make sure that everything is going as it should be. And then if anything looks incorrect, they'll update it, let you know what they fixed or what they changed. And then you'll either finish up with the client or they'll finish up with the client. But cool. So I've mentioned that there's this tax preparer role, and that's the most popular volunteer role that we have at Catalyst Miami. Most folks come in, they learn to do taxes, they get certified, and they help clients prepare taxes themselves. So in those meetings, you're meeting with someone one-on-one across the computer in these times, and it's just you and them, maybe a married couple, or maybe a non-traditional family. But it's kind of like you're meeting with this household of folks, doing taxes for them, looking at all their documents, making sure everything is correct, asking them the questions. Once you finish preparing the return, you'll use the software we use called TaxLayer to prepare it. But once you finish, you'll let the person know that I'm going to go step out of this meeting and grab a quality reviewer. It'll be just a few minutes. Then the quality reviewer will come in, talk with the client, double check their work, ask them some questions. The quality reviewer will go back out, pull in the site coordinator to finish the return. And once the client signs off on it electronically, we'll send it off to IRS. So that's the tax preparer role and what happens when you're in that role. There also is a intake team role, and the intake team's role is to help the client get ready for the tax prep process. So before the client gets to the tax preparer, they have to fill out an intake form, they have to upload their documents, and all the documents have to be reviewed to make sure they're correct and nothing is missing. They have to either connect with the client on the phone or in an intake appointment. So it really is just it's like a pre-preparation meeting, and the intake meetings are actually just as important as the tax prep meetings. If intake is done poorly or not well, it makes tax prep harder and longer. So the important thing to just keep in mind is that there are two different roles, and as y'all filled out this the Catalyst Miami volunteer intake form, when you signed up to be a volunteer, you indicated which roles you were interested in. If you decided you want to change roles and you'd rather be a tax preparer or you'd rather be an intake or you want to try doing both, just let me know and we'll get you updated and make sure that you're in the further trainings for those specific roles. Now you may be thinking, when is that role specific training? We have one set for right now. It's going to be on January 20th, which is a Thursday, from 6:30 to 8. And this is just a time where we'll break off into teams. Tax preparers will go hang out with tax preparers. Intake coordinators will go hang out with intake coordinators, and there'll be a chance to cross train as well. We'll learn about the softwares that you'll need, the processes that we take. And this training will talk a lot about those things, but this will actually show you some of the software that we can't get to because it's not live, because we're waiting on the software vendor to turn it on, which typically happens around MLK Day. And right now, for those watching the recording, it's January 8th, so we're not quite there yet. So with that, I want to show you all some resources that are going to be really important to us as tax training attendees. So I'm going to share my screen, and I'll be sharing my screen throughout the day, so y'all just be prepared. There will be lots of screen sharing happening and lots of other things as well. So the first thing here is, and this link is listed in the calendar invite for the meeting. So if you ever need to reference it, know that it's there in the calendar invite. I'm going to drop it in the Zoom chat as well. If I can find the Zoom chat, I'll share my screen. Maybe I will. Okay, there it is. Okay. So here's the link in the Zoom chat for anyone who is live in the meeting. And so this is meant to be like a one-page resource to connect you with the most important things that you'll need for tax prep. And you'll notice I've got a few different tabs open. All these are all tax forms. Many of these are these forms that we're going to use in this training. So the first thing is this. So every IRS document has either a form number or a publication number. We'll refer to the number sometimes and refer to it by some name other times. So this form is called the test book. And this basically has all the questions for the VITA certification. So anyone who does taxes through VITA has to be certified. And there's a few different certification levels. There's intake and quality review. There's quality standards, or like volunteer standards of conduct, which basically is just like an ethics test to make sure that you're going to treat client information correctly. There's a site coordinator test that's optional for anyone who's a site coordinator, which will mostly be Catalyst staff. And then there's a basic and advanced test. And there also is a shorter test for return volunteers. But the important thing to know with all of these tests is we're going to focus on intake and quality review, volunteer standards of conduct, and the advanced exam. So we'll go through, look at all the questions for those, answer all the questions for those over the course of this 2-day training. And all of those questions can be found here. So I'm actually going to pull up the book for y'all to look at. And I was looking at one of the advanced scenarios. But this is what it looks like. So IRS Form 6744, volunteer assisters test and retest. The important thing to remember is this book is updated every year. And if you're ever at the live website from IRS, it should be the most up-to-date version. But you just want to make sure that if you're looking at a saved PDF, that you're not looking at the wrong year. So always kind of check to make sure on this first page that the year is correct. And then on the second page here, there's a few volunteer standards of conduct, and we're going to come back and go through these in just a few minutes. Since there's a whole test on this, it's obviously really important that you all know these things. So we'll come back and look at these in just a second. But the next thing is, if you're looking at this table of contents, basically you'll see that this is broken down into some instructions about the test and what's going to happen, how you can write down your answers and whatnot, where you can go to take the test, which we'll talk about in just a second. And then we basically straight into it, there's the test. There's the volunteer standards of conduct test, intake and quality review test, the site coordinator test, which I mentioned most folks don't have to take, as well as the basic exam and the advanced exam. And then there's this qualified experienced volunteers, which is typically for returning volunteers who are a little bit more experienced. There is this military exam, which is like anything after advanced is like a higher level of certification that lets you do a little bit more things. So the military exam lets you do prepare taxes for folks that are obviously in the military and folks that have rental income. There's an international exam for folks that live abroad or live abroad for part of the year. There's a federal tax law update for C230 professionals, which basically is for accountants and enrolled agents and folks that have professional certifications. And it's a shorter test. They don't have to take all of the same test as regular volunteers. And then lastly, there's a foreign student test for volunteers that help foreign students. So when I was a university student, we did taxes at our International Student Life office for all the international students. And this test teaches you the things you need to know to be able to prepare taxes for international students. Locally at Miami-Dade College, we have in the past done tax for international students to help them make sure they have everything that they need. Oh, okay, there's a question here. Kay is asking, once certified, are we required to obtain a P10? And the short answer is no, because you all will use the Catalyst Miami equivalent. So all nonprofits don't, or anyone who's a VitaSite doesn't have a P10. We have an SIDN, which basically is the like nonprofit version of that. You won't have to get a P10 unless you're preparing taxes on your own. But for us and through our programs, you won't need to have one. You'll basically use our number, and that'll like count for you to submit returns electronically. Great question, Kay. For anyone who's interested in getting a P10 for personal reasons or to like, do taxes on your own as a side business thing, there's some great videos online for how to get it. But if you ever want to talk about it offline, I'm happy to chat and answer any questions you have about it. I don't personally have one, but I've thought about getting one for a while. So, I'm very familiar with the process and can talk to you about it. All right, cool. So with that, I want to jump in to just show y'all a few of the tests and what they look like. So we'll actually take this test later on today. This is the volunteer standards of conduct test. And basically every test starts with a little bit that you need to know about the test. You got to take them annually. So basically once a year, you got to take the test. In order to be certified, you've got to score an 80 or higher on the exam. And we've got all the correct answers. So we're going to make sure that you all get that score. But if anyone's watching this and they are worried about taking it on their own, again, we'll go through all the answers together. But if you take it once and you fail, what I'll say is before you take it a second time, because you can only take it twice. If you fail twice, then you fail twice, and it's harder for you to volunteer in the program. What I would say is reach out to me and follow up, and then I'll basically make sure that we go through the questions together to make sure you've got them correct, so that we talk about what you've gotten wrong and what you've gotten right, but we'll make sure that you're on the right track so that you do get that pass. All right, and then from there, you just dive into test questions, and there'll be all the questions are multiple choice. And sometimes there'll be these like, which of these above, or is it all the above, or just two of these options. Sometimes there'll be true false questions, but the short answer is they're all multiple choice. We'll spend some time looking at these more in depth later on today, but just want y'all to know that a little bit about how the test works. And when you scroll past one test, on the next page, it takes you to the next test. On the next page, there's a retest version of these questions, actually. So if, let's say you take the test and you don't pass the first time, these are the questions they'll ask in their retest questions. And they're actually just alternate versions of the same question. So the question number one here on the retest is which volunteers must pass the volunteer standards of conduct? And there's 4 choices. And then if you look at number 1, it's a very, very similar question. Prior to working at a VITA TCE site, all volunteers, greeters must, and you can imagine it's something about be certified and have volunteer and read the certification, sign some forms. But all this to say, like, they're very, very similar questions. They may not be exactly the same, or sometimes they're the same question with different multiple choice options. But know that the test and retest questions are very similar. So if you, because this is meant to be an educational tool and teach you about tax law and how it all works. So, it's like you learn by taking the test, if that makes sense. So that's the test book. And we're gonna come back and focus on those volunteer standards of conduct in just a little bit. But the next thing I want to show y'all is this 4012, which is, folks refer to this as the quote unquote tax Bible. And basically the 4012 is this resource that has lots and lots of things that you'll need to know as a VITA volunteer. It's like the most important things you need to know. And this book honestly has all the answers for the test that we're going to take. But the thing it's like you have to know how to find it. So as we're looking through the certification exams, we're going to talk about where you find things, how you use this book. We'll look for answers. We'll talk about answers as we go through the exam questions, and then we'll typically go to this book, try to find them. Make sure that you know how you can find things if you need to. Because the idea is for you to stand alone as a volunteer, not need to depend on a Catalyst staff member, but we are there if you need us. So this book is broken up into tabs. So if you actually have the physical copy, there'll be tabs on the side. You can see tab 1 is for who must file. Tab 2 is for starting a return and filing statuses. Tab 3 is for dependents. Tab D is for income, and et cetera, and so on. But basically, as you're thinking about taking the test, you're going to be thinking, what is this question asking? Is it asking about income? Okay, great. Then let me go to the income section and see if I can flip through and see the answer. And if you're looking at this as a PDF online as we are now, know that these links are clickable. So you can click on the tab. Oh, now this link is broken. Of course, it doesn't work in the live demo. This is how it always goes. But you should be able to click on these links and it should take you to where you want to go. So yeah, so that one worked, and it took me to page E1, which is focusing on adjustments to income, which we'll talk about what those are in just a little bit. But yeah, so important thing to know here is just Tax Bible 4012 is out here. We're going to use it a good bit in this training. The next two things are, and we'll do these a little bit later, but I do want to point them out to you so y'all know where to go. To actually take the test, there's a link here to go to Link and Learn. It should be pulling up now, slowly but surely. And basically, if you've never been here before, you're going to create an account here. And I'll actually just go through really quickly and show you all how to create an account in a second. If you've signed in before, you volunteered before, you can sign in with your information from the prior year, as well as your password from the prior year. It always carries it forward, and it doesn't change it unless you change it yourself. And if you've forgotten it, you can always click here to be reminded of your username and password. As long as you still have access to your email, you should still have access to all of that. And then there's a few important quick links on the right here. So there's a link to an online training called Link and Learn. There's a link to the test book that we just went through, the certification test and retest. There's a link to a VITA training guide, as well as the practice lab. We'll look at the practice lab in just a second. But if you're trying to get to this site, it's of course linked to that document that is included in all the calendar invites, or you can just go to linklearncertification.com. It'll pull this up and then you can get started. Cool. So we'll look at the practice lab. Before we do, I want to show you all what it looks like to create an account. And we'll make time to do this during one of the breaks today. So if you're on the call, you don't have one of these accounts yet, don't worry. One of your homework or one of your break activities is going to be a great one. But yeah, so as you're filling this out, the main things you're going to want to do is check that you are in fact a VITA volunteer. Unless you're a site lead somewhere, you'll check no for site coordinator certification. to check no for instructor. Like I'm an instructor, but most VITA volunteers are not. We don't work for IRS, so we're not a spec territory manager. And if you do plan to volunteer in the program, which should be everyone, the answer should be yes. Your training source is going to be other, actually, because we're doing like a kind of in-person hybrid training. And then from there, you'll just put in your information. So I filled this out already, so it remembers all my info. It could be Darren L. You'll put in a password, yada, yada, yada. Put in the password again. Let's make the match look like I'm putting the same thing. You'll put in your email. So mine is Darren at Catalyst Miami. You'll confirm it. And this is a good little thing for folks that need to reach out to me. That's my email, Darren L at catalystmiami.org. You'll put in your address. I'll put in the Catalyst address. Florida 33137. Phone number is not required. You also notice I skipped this SEID field. That's only for IRS employees, so don't worry about doing that one. You don't have to enter your phone number as well. It doesn't share it with me or any other volunteers. It just is kind of in the database. And then for time zone, we'll do Eastern. How many years have you volunteered? For me, this is my 12th year. We are not any of these, unless if you're a CPA or an enrolled agent, or if you do taxes on the side, then, or if you're an attorney or a CFP, you can enter these roles here. Otherwise, you'll go ahead and just leave this field blank. I mentioned PTIN numbers are not required, so you can just leave this field blank. But if you have a PTIN, go ahead and put it in. And then if you've got a PTIN card and it's this other CTEC number, which I'm actually not sure what this is, but basically, if you have these things, go ahead and fill them in. If not, you've completed all the fields that are required. You'll click register, it'll register you, and then you'll be in. Make sure you write down your username and password. It'll be really important. You'll need to access this at least through the certification process, but likely through other tax filing seasons as well. If you volunteer for multiple years, which I hope you'll do. All right, next thing, y'all. Next thing here is we're going to look at the practice lab. So for the practice lab, you'll click on this link, and this is also linked here in the Catalyst Miami sheet. So tax layer practice lab. And I've got the password here for you all because it'll be really key and you can't get in without the password. And what the practice lab is it's a place for you to practice doing tax returns. You can put in fake information, you can put in dummy information, you can put in whatever you want and just practice and get to know the tax software. So this is basically a heads up that like this is not a real software. It's not live, but it looks like the real software. And as the software provider makes updates to it, the update makes updates to the real software. It shows up here in the practice lab. So I enter that password, which is Train Pro Web in all caps. Again, I'll go back here and highlight that the password is Train Pro Web. All right. So then once you're here, you'll be able to create an account. It'll ask you to log in. I always use my account information from the prior year, so I forget what this looks like. You'll enter your address, your username, your password, select the type of program, which will be VITA. And then don't worry about the SID number. It should let you register without that. And then you'll put in a security question in case you need to get back in if you get locked out. And then once you do that, you'll create an account and that'll be it. So we'll actually look at the practice lab in just a little bit, but if y'all have questions about it, of course, feel free to drop in the chat, but we'll spend some time in this either later today or more likely in the second day of this training. Cool. All right, so with that, we've gone through the most important resources that y'all need to know. We're going to spend a little bit of time looking at this intake and quality review form so that we can pass that intake and quality review test. So we'll go through that, talk about what's on there, what's important, and then we'll answer those test questions. And then from there, some additional training resources, a fantastic organization that, full disclosure, I also do some work with. Prosperity Now has a training called the VITA Train, which is an online self-paced training. I think it's really thoughtful and very well done, and it gets updated every year. I helped with updating a little bit this year. So recommending that if you're doing online training and you don't, let's say this style of training isn't working for you, that's okay. Here's an alternative that you can use. As well as here's a link to a bunch of IRS training resources, like the e-training that I referred to earlier. IRS has a few tax forms that are really important. So there's a few that we'll look at here very briefly. The first is publication 17, which is, if there's the tax Bible, this is like the grander version of that. Like this really has everything you could want to know about tax law and tax filing for this year. But because of that, it's 140 pages and it's not always the easiest thing to read. And it's set up in these like 4-column formats. And, there's basically, it's a lot of information. And it can be a great resource, but it also can be a lot, be overwhelming to volunteers. Just a heads up that this is here. And it is something good to know if you're interested in tax law, maybe working in tax. You can find a lot of answers to really complex situations and interesting things here in this Pub 17. In addition to that, there's a few quick things. The taxpayer consent form. So since we're doing taxes virtually, every client who fills out an intake will need to fill out this virtual intake form. That's called a 14446 form. And we'll have this pre-filled out for clients. So for them, it will be automated basically. When they fill out the software that we use, all of this will just kind of get filled out for them. And they'll just sign at the bottom and say like, yeah, this is right. I'm doing my taxes virtually and I agree to what's happening here. All right, so I'd like to include this link here to the IRS Forms Finder because IRS has a lot of forms and they're always changing. And someone may say, oh, I've got this thing, and you may be like, I've never heard of that or seen that before. So let's say if you want to look at a W-2, you could just say, put in a W-2, click find, it's going to pull up the most recent W-2 version. These are drafts because IRS is still finalizing documents as they do in the beginning of each year. But so these will say draft. They'll remove that. They'll remove the watermark when they become finalized, which should be quite soon. But then you can see basically what a W-2 looks like, the information that it asks for, and that kind of thing. And this works for all kinds of things. It can be 1099-R. And that'll pop up. You can click on that. It can be a 1040. It really can be any tax form you can think of. If you know the number, you can typically find it this way. They also have other ways for you to search, but yeah, so just heads up that resource is out there. And then the last little bit here is there's a second software we use called Get Your Refund that helps us and helps clients to upload their information. This is like a safe, secure program organized by an organization called Code for America, and they provide divided sites for free. It's a really, really great service, and it makes doing taxes virtually much easier. So all this to say, we're not going to get into Get Your Refund today, but this is one of the softwares that we will go through in that January 20th training, so that you can like really get familiar. And by then, the kind of version of it should be live and we'll be able to demo it and show it to y'all. But we've used it for the last 2 years. It's a really, really great software. I'm excited to be able to use it again for this tax season. Whew. All right, y'all. So that was a lot. The only other thing that I'll kind of point out to you, I think we talked about most of these things. The only other thing that I'll point out to you is that so there, the Catalyst Miami is the tax site, and we're your site coordinators. But we also have a contact from IRS, and they're called our IRS spec relationship manager. For us, her name is Gina. She's a really delightful woman. She's been I've worked at Catalyst. It's on and off for about 7 or 8 years, and Gina has always been the relationship manager, and she makes herself available. So if there's ever a question that I can't answer or someone else on the site can't answer, and no one else can figure out the answer, we can call Gina and she'll help us to solve it. She's really a resource to the site, but not a resource to clients. So we'll keep her information and reach out to her. But she's not someone to like refer clients to, if that makes sense. She's really just there to kind of support us as a site. And then we can pass that information on to clients if they're asking a question that we don't know the answer to. And the last thing is, the internet and Google is also a great resource. Everything I've shown you so far has been an IRS document. But when I'm looking at things, typically, if I don't know the answer, sometimes I'll go to Google as a starting place. Sometimes I go to the 4012. It's just really important that if you're looking at Google, that you're verifying with multiple sources, because some things can be outdated and tax law changes every year. So it's just really important that like if you're Googling something and looking for it, that you're double checking to make sure that the answer that you find is in fact the correct answer. All right. So with that, we've talked about a lot of documents. I want to talk for a second about what is VITA. So obviously the VITA stands for Volunteer Income Tax Assistance. But VITA is more than just doing taxes for people. VITA is really an education opportunity, both for community members to learn to do taxes, but also for clients to really learn and understand their taxes. We're trying to educate people. Like that's really our goal and our aim is We're focused on helping people to build wealth and build prosperity. And a part of that is understanding what's happening in your taxes. You do this thing once a year and you may get a big refund and you may owe a little bit of money, but we want all of our clients to walk away with a deeper understanding of what's happening on their taxes and what they can do to change it and be more in control of that process. So that's what VITA is really about. And you all will get the chance to, of course, talk with people, but then also to get the chance to like walk through the return with them and explain what's happening. And later on today, we're gonna, I think we'll get to it today, maybe on the cusp, we'll see. But we should go through and do a dummy tax return, and we'll do it by hand so you all can see kind of how you prepare taxes by hand. Even though we're using a software, it'll be important for you to know how to do the taxes by hand, or at least to read a tax return, so that way you can show a client what's happening on their return and explain it to them at the end. All right, so we're going to get a little bit into some of the things that are going to appear on some of these first few certification tests that we're going to take. So the first thing we're going to look at is, I alluded to this earlier, we're going to look at this 4012. We're going to look at the first page of 4012. All right, so the first page of both the 4012 and the 6744, which is the test book, with the test questions in it, have the same first page. The first page focuses on, boom, here it is in this book as well. But basically, it's just on what can and can't we do as a volunteer. So this basically is IRS language for, hey, heads up, you as a VITA volunteer, you've got to do a few different things. One, you've got to agree to follow the site requirements, and that's what these are. The volunteer site requirements and QSRs, you basically have to like do the things that are asked of you by the IRS. Next thing is you will not accept payment or solicit donations or accept refund payments from customers or from clients. So again, VITA is a free program, and it's really important that clients perceive it as free because the IRS is providing the software, providing support. This is not meant to be something that allows us to solicit business, either Catalyst Miami as an organization or yourself as a tax preparer. And there'll be a question in the certification about like if you're doing tax for somebody and they're like, oh girl, your hair is cute, and you're like, oh thank you, my cousin does it, she's great. You can say that, but then if the client is like, oh, can I get your cousin's phone number, I really like to do hair, I really like to get my hair done by her, unfortunately you have to say, sorry, it can seem like we're soliciting business and that's really not what we're trying to do here. So I just want to make sure that like, I'm keeping work and volunteering and personal life separate. That way it doesn't seem like, you're like referring someone to your cousin or a family member, someone who may benefit, their business may benefit. An easier example of that on the financial side would be someone comes in with an investment question or a tax, they're doing tax and they've got some investments. They are looking for a financial planner. Your cousin's a financial planner. You give them your cousin's name. That would be a standard of conduct violation, and could get us in trouble and could get you in trouble with IRS. So all this to say, like, this doesn't happen a lot, but just a point to keep in mind that like trying to refer people for business things. Also, try not to. I say this because like it's happened to me in my time of volunteering at Catalyst. Is I've had a volunteer take information off of a client's tax information and text them and ask them if they could hang out later. That is not okay. You cannot be picking up clients or trying to text people with information that they gave you from their tax return. We had to, we ended up having to report this person and limit where they could volunteer because the site was uncomfortable with them. And what I would say is like if you have a temptation to use personal information that you see on a tax return, don't do it. It's not worth it. If you have questions about it, please ask me. But please don't ever reach out to a client, via information that they put in their tax return. It like both looks terrible and like can put us at risk. All right, so this fourth one is don't knowingly prepare false returns. So as you're doing returns at VITA sites, it's really important that like you listen to everything the client is telling you. Clients will typically like ask questions, tell you things. If someone says something like, oh, here's my W-2, here's all my information, but also I work on the side and I do hair, then it's your job as a volunteer to then ask like, hey, so you mentioned you do hair. It's really important that you include that on your tax return so we make sure this is accurate. How much money did you make? And most people will say like, oh, I made a few $100 here, or I made this much money. And then you can ask them if they had any expenses. But like basically, if someone says, I work on the side, you can't ignore it. It's your job as the preparer to like ask follow-up questions. And if you ignore it intentionally, that would be preparing a false return, which is not allowed. So if someone ever asks a thing, or if you're like, I don't know how to do this, or I'm not sure how to proceed with this, reach out to your site coordinator. We'll jump in and ask any questions that you may not feel comfortable with, and you kind of watch us and how we interact with the client as well. So the same thing is true for if a client like asks a question that makes you uncomfortable, or you're just not really sure how to deal with them, or if they're being difficult. Like, please, that's what we're here for. Reach out to us. We'll step in and make sure that you feel good and they feel good, and hopefully things end on a good note. All right. So the last two are don't engage in criminal activity, or do things that will have a negative effect on the VITA program. So if you I'll give an example that may or may not show up in the exam. If you are arrested for embezzling money from your company or insider trading or something, and it's on the news and your face is there, and the next day you show up at the VITA site to volunteer because you're out on bail or bond, we may ask you to step away because we don't want your actions to negatively reflect on the VITA site. And we don't want clients to feel uncomfortable or be worried that like something negative may be happening with their private tax information. All right, so the last one is, and this is obviously obvious, it's just the golden rule, like treat others how you want to be treated, be professional, be courteous. If someone isn't treating you well, again, please elevate it to the site coordinator and we'll come in and make sure that everyone is happy and satisfied. But you're both a volunteer, but you're representing both IRS and Catalyst Miami and everything that you do, and yourself also, right? Like, uh, places are bigger and smaller than you think. Miami is bigger and smaller than you think. If you end up fussing with somebody and then you see them in Publix later, it could be a bad look. So allow us to support you and make sure that you feel comfortable and you're able to be professional and courteous and respectful of the client that you're working with. So the last little bit is just here. It's just about failure to comply to these standards to result in removal. Basically, you could be removed from the VITA program if you fail to meet these things that are listed above. You may lose access to do tax returns. So I know this sounds like scary and frightening, but the really important thing to keep in mind is just if you have a doubt about whether it's something you did wrong, if you did something wrong or not, reach out to your site coordinator. We'll work with you. We typically can correct most things and make sure that you're okay and make sure the client feels good, and just keep in communication with us, and it'll all be all right. Whew, okay. That was a lot. Okay, cool. So we talked about all these things. The last thing that I'll talk about is there are some things that we can't do at VITA sites because they're out of scope. So what does scope mean? Scope basically means IRS allows us to do, we really can do like almost any tax return under the sun. But there are things that typically like fall outside of that scope. So an example of that would be like, we can't do tax returns for corporations. We can do them for LLCs and our single member LLCs and for sole proprietors because they're done on a Schedule C, but our software doesn't let us do taxes for C Corps and S Corps. And because of that, they're out of scope for VITA. We just can't do them. Another example would be someone may come in with a really, really rare tax form that the software can't handle. And if that happens, then they'll be out of scope for VITA. But typically the intakes will do a really good job of catching if we can do it or not. And another example would be, let's say no one at Catalyst Miami is foreign student certified. So we all got advanced certified, did all the other certifications, but we didn't ever become foreign student certified. If a foreign student comes to our site and tries to prepare taxes, and we're not certified at that level, then we can't prepare taxes for them because it would be out of scope for us. We would need to get certified first, and then would need to be able to have them. All right, cool. So yeah, we're doing good. We're going through this agenda. We'll take a break in a little bit, but the last thing I want to talk about here with this kind of benefits and protection section is just that all of this is meant to protect all of us, right? Like it's meant to protect you as a volunteer. It's meant to protect Catalyst and the IRS. Same thing with the certification process. It's meant to like teach you what you need to know, so you can feel like you're doing a good job. But really, taxes sound scary and terrifying, but really it's really low stress. We're all going to be trained. The Catalyst Miami team will call me a tax expert, but like basically we're all here to support each other. If I don't know the answer, I'll call someone else who does. They'll help me figure out the answer. But typically with VITA, if you stick to the process will kind of support you, and you will rarely run into hiccups that you don't know. And if you don't, we'll be able to get your back. We've got this quality review process. So, 2 people are going to look at every return, as well as the IRS will like keep us honest to make sure that we're doing things right. And we'll do some random spot checking of a few returns as well. Or they may. And and then typically folks will come in an hour, and within that hour, we'll help people get access to money that they couldn't access otherwise, or have to pay really expensive prices to access, like Kay mentioned. Tax preparers on the street be charging lots and lots of money, anywhere from $250 to $600 for returns that seem relatively simple. And the nice thing about VITA is because our service is free, folks get to keep that extra money and use it for things that matter to them, for their friends, their family, for mental health stuff. Folks can use that money in the best way that kind of works for them. And that ties into our bigger goal of just helping clients be more financially stable. I think that's really the gold standard here, is really just trying to help clients to build wealth, be financially stable, and like hopefully pass on their knowledge to other people in their community, because that's how you make big change, right? Like through both policy and through like individual grassroots. Helping one person but teaching them how to help other people can be a really big way, which is why we always encourage folks that do taxes with us to think about volunteering and giving back. And there's a few clients, I think no one on this call today right now, but there's a few clients who also who started out as clients and became volunteers over time. So that could possibly be you. Whew. Okay. So I've been talking for a while. I feel like I've been talking for a minute. I'm gonna stop sharing my screen for a second and just ask. I'll stop to see if there are any questions. Kay, do you have any questions? Anything popping up for you?
No, not really. You pretty much going over in detail everything.
All right, perfect. Well, cool. Thank you. So yeah, we're gonna take we'll take a 5-minute break, and I'll pause the recording. I'll give myself a second to drink some water. We'll regroup. We're gonna go through the intake and quality review sheet, and then once we finish that, before we take a longer lunch break, we should be able to go through all of that, and then hopefully take 1 or 2 of the exams as well. So if you haven't already, go ahead and get a pen and paper, and then if you want to number 1 through 10, and then 1 through 10 again, so 1 through 10 twice on a piece of paper. We'll go through the questions, write down the answers, talk about why they're correct, why they're incorrect, after we get back from this break. So yeah, we'll come back at plan for a 10:25 start again, and we'll go from there. All right, hi again, everybody. Welcome back to tax training. And in this section, we're going to be talking about intake and interview. So we'll talk a little bit about what the intake process is like. And I mentioned this last time so I'll start off and say I mentioned this last time, but intake is the introduction to taxes, right? So clients typically come in. They may fill out a little bit of information, but the intake is the first like human interaction that they have. So for those that are doing intake, it's really important that it's like small little things, right? But of course, keep in mind the golden rule: treat others like you would like to be treated. In addition to that, it's really important in the tax prep process to think about some of those best practices for preparation, right? Like measuring twice and cutting once. And if you plan to fail, you fail to plan, you plan to fail, it doesn't work out for you. Haste makes waste. Like all these sayings of like basically like take your time. This is not a race. Like you're not trying to do the client's taxes as fast as you can. Just do a good job. Ask them questions as they're sitting in front of you and make them feel comfortable. We should start with something as simple as like just smiling, right? Like just be friendly and kind of welcome folks. And if you hear some kids in the background, or they're coming a few kids on their tax return, you can ask them how old their kids are, and just kind of do things that make folks feel comfortable and feel welcome to the site. So with that, there are a few requirements that quality site requirements that each site is required to do as well. So I want to pull those up for y'all and just talk through those really quick. This will, again, be really important for the certifications that we're about to take. So what are quality site requirements for VITA? So basically, like a quality site just means like, a site that's doing everything they should be doing. The first QSR is certification. So basically, again, all VITA volunteers have to be certified. Next is intake and interview. Every client has to use the intake and interview and quality review process. We have to use the intake form. We have to have a second pair of eyes check over the return. The next thing is just confirming photo identification and taxpayer identification numbers. So for most people, this would be a social security number. Some folks will have ITIN numbers, which is an individual taxpayer identification number. It's a number for folks that don't have social security numbers to use when they prepare taxes. And the reason we check the photo ID is really just to prevent identity theft. We want to make sure that folks and that clients are who they say they are. And if we know them from a prior year or know them from something else, then you can like reach out to your site coordinator and they may say like, hey, this is okay. But otherwise, we really do want to make sure that we're seeing both social security cards for all the clients in the return, so dependents and clients, and the IDs for folks where they have IDs. Like some dependents may not have IDs. The next QSR is reference materials. So this just refers to a lot of the things we've looked at already: the 4012, aka the tax Bible, the Pub 17, the stuff that's available on the internet. It's just making sure that you've got the resources you need to do a good job and that you can refer to them when you need to. And in this virtual environment, typically just having them being able to pull them up on a website when needed or having a tab open with them is typically enough to meet the IRS's needs of having these reference materials available. The next thing is the volunteer agreement, which I'll show you all in just a little bit. But this basically allows you to, this is like what you fill out after you've passed the test. It basically says, I've passed, here's my passing score, or not my score, but like, here's the fact that I passed. And it's me signing to say, I'm gonna follow these volunteer standards, do these things throughout this tax season. The next thing is timely filing of tax returns. So basically, what we do at Catalyst Miami is when someone starts a tax return, as soon as they finish it and it's been both quality reviewed and signed by the client, we make it our priority to send it off to IRS later that day. And typically it'll be accepted right then. There are some people who their return will reject, and then we try to follow up with them within a few days, reach out to them the next business day just to make sure everything is correct. But basically, filing taxes on time is really important, and it just it can be a big deal. So we want to make sure that we're filing timely. Hi Taylor, welcome. I don't know if your audio is on yet, but welcome.
Hi.
Hey. So there's a small group of us today. Go ahead and go on mute. I do want to ask for permission to record the session because we're recording right now.
Yeah, that's totally fine.
All right, cool. Thank you. Well, I'll dive in. You haven't missed too much yet. We're going to be going through the first two certification tests in a few minutes. And I know you volunteered last year, so a lot of this will seem familiar.
Yes.
Cool. So with that, going back to the quality site requirements, the next thing is civil rights. So and very quickly, IRS provides a poster that is at physical sites. But basically, it's just important that we treat people correctly and respect folks' civil rights and treat everyone equally. And IRS typically has a poster in the background that says like, hey, here's what we're abiding by, to kind of show that we are adhering to the civil rights requirements that they have. The next two things are basically numbers that will automatically be on the tax return: the site identification number, the electronic identification number. Basically, just know that those will be included automatically, and we have to include those to say, yep, this is the Catalyst Miami return, and we did the taxes for these folks, and and please associate it with us if that makes sense. And the last quality site requirement is just about security. So privacy and security are really, really important to VITA, especially in these times where you hear about companies having leaks and client information getting out. We basically want to do everything we can in our power to protect our client information. And we've got a process that allows us to do that. So just know that, we'll teach you all more about what that process is like when we have that training on January 20th. But for now, just know that, privacy and security and confidentiality are really, really important. Cool. So those are quality site requirements. So we actually know enough now to take one of the certification tests, but we're going to pause for a second and go through the intake form. So for anyone who's volunteered in the past, you'll be very, very familiar with this. this is the intake form. This is the thing that we use every time a client comes in. It has to be filled out, and typically before folks get to the tax preparation stage, the intake coordinator will go through this, make sure everything is correct. If there's any fields missing, they'll fill it in, they'll help clients to fill it in. But yeah, so the important thing to know here is just that this is required for everybody, and it tells us as the preparers what we need to do in the tax return. It's actually like a really useful document. So I'm just going to go through the basics of it so that y'all can understand, and so we'll be ready to answer those test questions before we go on this lunch break. All right, so the first part focuses on personal information. So this is client's name, client's phone number, if they're a US citizen or not, which is important for some tax credits, if their spouse's information, if they're married, and all that same information for them. And then we've got address, birthday, job details, and as well as a few things like if the client is blind or totally and permanently disabled or a full-time student. These are all things that tie to tax credits and will teach us a little bit about what we need to know to do the taxes correctly for this client. The number 10 is focused on if you can claim someone as a dependent, as well as if you've ever been a victim of identity theft and you have a taxpayer identification PIN number. That's what number 11 is about. 12 is about email addresses, which is an optional field, but we typically do get clients' email addresses since we are typically sending them a copy of their return electronically. And that may lead folks to ask, like, can folks pick up a copy of their return physically? Yes, they can. We can either mail it to folks, or we typically have like a day where folks can come by the Catalyst Miami office and like get it from a staff member. But you know, due to the pandemic, we'll see if we end up doing that. But we have the option to mail it to folks that do want a physical copy. Part 2 of this form focuses on marital status. So this question here typically is the best indication of what someone's filing status is. So if someone says never married, they're very likely single. If someone says married, they likely are married filing separately or married filing jointly. We'll talk about all these filing statuses in a little bit as well. So y'all kind of brace for that conversation and know that it's coming. If someone is divorced, then they're likely are single, but they also could be head of household. If someone's legally separated, same thing, likely single, but could be head of household. And if someone is widowed, they could be a qualifying widower, or they could be married filing jointly if they remarried, or they could be single or head of household. So all this to say, this is kind of a good indicator of, it can lead us to finding out what the best filing status is for a client. The next section here is about dependents. So basically, it'll say list everyone that lives in your home, but really what's important here is listing the dependents that you're going to be claiming on your taxes, and making sure the clients understand that they should be listing, you know, who they're trying to include in their taxes. As well as there's a grayed out section here that's just for the volunteers to complete, that ask a few questions about, like, is this person, do they qualify for, are they a qualifying relative or child? Do they provide their own support? Do they have income? Yada, yada, yada. So over a certain amount, basically this also ties into some questions that that need to be answered. And again, the intake will help to make sure these things get filled out, or you can add them as the preparer if they're not listed in the return by the time you get there. All right, so I started filling this out. Is this actually filled in? No, it's not. I started filling this out in one of the other trainings, so there's a few things checked already. But the next section of this intake sheet basically tells us what is important for us to know in terms of the client's income, in terms of the client's expenses, and in terms of major life events for these clients. And basically, clients will answer yes or no to each of these, or unsure. And it's your job as a tax preparer that if someone says, yes, I've got W-2 wages, but they missed this box for saying how many jobs they worked, you would just say, oh, great, you worked one job. Thank you for that detail. You'll ask them for that information. You'll say, all right, great, looks like you don't have tip income, and you'll go through and say, it looks like you've got these things, you don't have these things. Seems like you marked unsure for alimony. Just want to see, were you married last year, or were you married in the past, and do you get alimony from an old spouse? And they'll say, oh no, I was never married. I just wasn't sure what alimony was. You'll say, okay, great. You'll mark this as no, unmark this unsure. And same thing if someone says, I got cash and check payments for some work that I did on the side, but I wasn't sure if should be including that. You'll say, okay, great. It sounds like you did get cash on the side, so we'll go ahead and say yes to this. And then later on, as you're doing the return, you'll just follow up with them about each of the things that they've marked here. So I didn't fill them all in, but this is traditionally filled in with either yes or no all throughout before the return is started. And the nice thing about this is it teaches you, it tells you what forms are important to know about. So W-2 is what most wages are reported on. Tip income is typically cash. There's not a form number there. Scholarships are reported on a W-2 or a 1098-T. We'll talk a lot about different tax forms and what they are, and I'll look at a few of them later on in the training, but just kind of know that this is like a nice cheat sheet. And the other like little cheat here is, this will be important for a certification question, is for folks that are certified at different levels, everyone who completes this training is going to be advanced certified, but these little parentheses beside these questions tell you the certification level. So B is for basic, A is for advanced, and you'll see almost everything here has an A or a B. So by doing advanced, you can do everything at the basic level as well. There's one exception here for this M, which is for military certification, where you have to be military certified to do prepare a return that has rental property income or losses. But everything else we should be able to do once we complete the certification over the next 2 days. You scroll down to page 3. There's just a few other questions here that we, kind of want to make sure we ask folks. There's a question here about if folks would like to receive written communications from the IRS in a language other than English. And there actually is a box in the tax form where you can say, hey, IRS, can you send all future communication to this client in Spanish, in Haitian Creole, in Mandarin, and whatever else it may be. You can indicate that so that if the client ever gets a follow from IRS, they'll be able to understand the letter they're getting in the language that they prefer. This presidential election campaign fund is, I'll go through these last few really quickly, but this basically is a general fund. Typically, if folks check this box and say yes, $3 will go to this fund, but it doesn't come out of their tax return. It just like, by checking yes, it allows the money to go from this fund right into this bucket for people that want to run for president. And this is kind of a funny one because the purpose of this fund is to help people who can't afford to run for president, but no one who's ever used money from this fund has ever become the president, because you typically have to have a lot of money and have support and backing from people to do that kind of thing. But all this to say, if you wanted $3 to go there, it doesn't affect tax returns, and that's what people will care about most. So if someone says yes, they want the money to go there, you just, they'll check the box here, you add it in the tax return, it'll be quick and easy. Number 3 is about direct deposit. So most clients will like to get their refunds, their returns via direct deposit, although some will want a paper check. If folks leave all of these things blank, then it basically means that they want a paper check. I typically, as a tax preparer or as the quality reviewer, will just double check and make sure, like, hey, looks like you didn't indicate you want direct deposit. Just want to double check that you actually, in fact, do want a paper check. And the benefit of doing direct deposit is typically refunds come about 3 weeks faster. So for folks that have access to a bank account and and can give us their account and routing information, it typically can make sure the returns get there a little bit faster. There's 2 other options here, one for US savings bonds, and this is the only way to get a US savings bond, like a physical one nowadays. But if someone checks yes to this, we can add to their return US savings bond, and they pay them out, I think, in $50 increments, and they're mailed to them. And basically, like, it's like a paper one. I actually did it a few years ago, so I could see what they look like. And like a little paper pink slip thing that says, like, this is a $50 US savings bond, and you can take it to a bank and cash it in, or you can wait a little bit, and it should grow and grow in worth over time. The last one here, C, is about splitting tax refunds. So this is important because if a client is like, hey, so I want to put half my refund into saving and half into checking, they would just need to check this box. If they want to split their refund, it'll allow us to split it however they like, whatever percentage they want. And we just need both the bank routing and account number for both of those accounts. The next one's about if you've got a balance due. If someone owes money on their taxes, do they want to take it out of their bank account, or do they want to pay a check to IRS or go on the IRS website and pay it? If folks go to the IRS website, you can pay for free if you have it come out of your debit card or your bank account. But it costs money to have it come from either a debit card or a credit card. And some folks like just don't want the IRS in their bank account, so they'll say no to this. But some folks will say, like, yeah, it's just easier if they take it out. And if they take it out, you can choose the day it comes, or the client can choose the day that it will come out exactly, and then they'll pull it out that day. There's a few other questions here about if you live in an area that was declared a federal disaster area. An example of that would be like Kentucky was hit recently by some tornadoes. So they likely are, those counties are likely a federal disaster area. Yeah, this typically is not inclusive of things like COVID-19, but it can change, and I don't think that there were any in Florida this year that I know of. All right, so keeping going down. if you received a letter from IRS, there's a box here for that. And this basically is those letters can have important information. So it's just kind of a flag for us to ask the client, oh, you got a letter, what did it say? Or do you have it with you? Because sometimes the letter can have an identity theft protection PIN number. Sometimes it can have information about IRS, something IRS wants them to do. So it just lets us kind of talk to the clients about that. And the rest of these questions, 7 through 14, are all like, they're all kind of demographic data collection questions. The IRS has started to ask about things like, do you speak English well and how well or not? Things like, can you read or write in English? Do you have a disability? Did you serve in the military? What's your race? What's your ethnicity? Same for your spouse. So these questions typically are optional. They're not required. But it does give us as the site some insight into who we're helping, which sometimes can be nice to look back and say, we helped, 10% of folks we helped had a disability, or 5% of folks served in the military, or 50% of folks speak a language other than English, or identify as Latino or Hispanic or whatever else it may be. And there's a little section here for notes. And then typically if the intake has notes about something that maybe didn't make sense to them or they want you to follow up on, they'll leave a note here and say something like, client may have additional forms, follow up. It's just kind of like a quick space for you to leave it, for them to leave a note for you as a tax preparer. It might say like, ask them about their third W-2 that they weren't able to upload, or ask them about this other thing. And the last page of the intake is really just an agreement to basically like for the client to share their information with the Vita site so that we can send it off to IRS, and have their permission to do so. So clients will just sign this and this will all happen electronically. Yeah, so that's the intake and quality review sheet. Yeah, if y'all have questions, oh, I see a question in the chat. Actually, I do something in the chat. Let's see. Oh, okay, that's great. Cool. Take your time, come back whenever you get a second. All right, cool. So we've gone through the intake. Okay, so I'm going to tell y'all a little bit about how appointment scheduling happens, or how it will happen this year at Catalyst Miami, so you can just kind of know what that process is like. So we'll have a website set up, and the website will have a way for folks to schedule appointments online, so they can book an appointment online. And if they do that, the intake will verify their information. It'll be an intake appointment, so we'll verify their information, make sure their information is uploaded correctly, and then from there, the intake will, if everything looks good, they'll schedule the actual tax appointment and confirm the client can go and all that. Again, everything will happen over Zoom. And then as you arrive as the tax preparer, you'll look at all the client information, in the first few minutes of the session. You'll look at the intake sheet that we just went over, make sure they completed the first few pages of it. You'll confirm that all the information is correct with the client. So you'll ask them like, hey, I just want to confirm you live at XX address, your phone number is XX, you're claiming 2 dependents, you're not married, that kind of thing. You'll verify that all the intake documents are there, that they indicated with those X boxes we just looked at. And basically just make sure everything looks as it should be before you start the return. Then from there, you'll dive in, you'll pull up the software, you'll start entering client information, you enter their name and all this other information from the form. If you are talking to a client and realize something is missing while you're doing it, you can ask them to provide you with that documentation right then, or to send it to you later if they're not able to finish it then. You'll then get to some survey questions. You'll get the client's email, get their direct deposit information. And then after you've gotten their direct deposit and you're at a good stopping place, you'll let them know you're going to get the quality review person. You'll go out of the Zoom, out of that Zoom breakout room, get the quality review. They'll come back in, review it with the person, verify everything is correct, and then finish the return, send it off to IRS once the person signs and says that it's okay. All right, so there's a few things that I'm going to flag for y'all before we get to these tests. So those things, they're like ethics-based things. They're important things to keep in mind. So if you witness someone doing something that you think is inappropriate or shouldn't be done, this can be me as a site coordinator. It can be another volunteer. If it's another volunteer, really, you should tell your site coordinator, and then we'll likely take care of it. but I'm going to put this email address on the chat. This wi.voltax.irs.gov is a website basically for folks to submit any feedback to IRS or report any incidents to IRS that they didn't like or didn't agree with, or it's a way for the IRS to follow up with us and our site, and for you all to submit anonymous information. And then I'll reiterate a few of these things before the exam again. We can't take tips. All returns must be QR'd, and we have to use that intake and quality review sheet. We've got to look at folks' IDs. We've got to look at social security numbers and ITIN numbers and the cards and documents that they come on. A volunteer can be removed for violating the volunteer standards of conduct. And you cannot accept a tax return, a tax refund on a taxpayer's behalf. So if someone asks this, if someone's like, hey, I don't have a bank account, but you do, and maybe you can get the money for me in your account via direct deposit, and then that way I can get it a little faster. You can't do that. That's not allowed, and we'll get you and us in trouble. So please avoid that. And then basically, if you tell a client something that is untrue on purpose, that would be very bad. So if it's an accident or you don't know, then that's fine. But if you're like, you've got some knowledge, you tell something to someone that's incorrect, that would put you at fault and Catalyst Miami, even though there's like protections for volunteers, it's just something that you want to avoid. So if you're ever unsure about something, just reach out to your site coordinator. We'll get your back. All right. And the last thing is those little bubbles on the side of the intake where it's like in parentheses A, in parentheses B, in parentheses M. Those all indicate different certification levels you need to prepare those types of returns like we just looked at. Cool. And I'm referring to these. All right. And with that, y'all, we're going to jump in and take some tests and answer some test questions together. So for this, I want this to be a little bit more, so I've been talking a lot, and I want this to be a little bit more engaging for this part. So what we'll do is read through the questions, and then if y'all can put in the chat what you think the answer is, I think that will be kind of the best way to go about this. Or you can unmute and say what you think the answer is, but this allow like some level of participation, and won't just be me talking for the next hour as we do the two tests, which can be a nice break for me. So with that, we're going to do the first test we're going to do is this volunteer standards of conduct test. You all know everything you need to know to do this. We've literally just gone through all the things. So we're going to go through these questions. And then if you haven't already, again, grab a piece of paper, write down 1 through 10, write volunteer standards of conduct or VSC exam, write down 1 through 10, and then we'll answer these questions together. And then we'll next do the intake and quality review exam after that. So you'll also write down 1 through 10 for that. And then we'll go from there. If you have any questions, please like jump off mute or put anything in the chat.
Are we answering each question together, or are we gonna like go through and do our answers and then share our answers?
That's a good question, actually. Let's do the first 5 together, and then I'll actually pause and give you all maybe 5 or 7 minutes to do the latter half together, if that makes sense.
Okay, got it.
All right, cool. So you'll get a little, and then maybe we'll do the second whole exam where y'all have a few minutes to do it on your own. So this is meant to be quick, and y'all, there's no wrong answers here. Please don't be embarrassed. There's, again, this is a learning space, so don't feel bad. But I'm gonna read this first question. Question 1. Prior to working at a VITA TCE site, all VITA TCE volunteers, including greeters, clients, facilitators, tax preparers, quality reviewers, they must A, pass the volunteer standards of conduct and certification test with a score of 80 or higher, B, sign and date form 13615, volunteer standards of conduct agreement, agreeing to comply with the VSC by upholding the highest ethical standards, C, pass tax law certification, D, all of the above. Oh, sorry. C is pass the advanced tax law certification. D, all of the above, or E, both A and B. So y'all can drop in the chat what you think the answer is. Taylor thinks it's E. Kay, you have any thoughts about what it might be? All right, Kay says E as well, and you're both correct. The answer to the first one is E. Great job, y'all. Let's go on to the next one. All right, can a volunteer be removed and barred from the VITA TCE program for violating the volunteer standards of conduct? A, yes. B, no. All right, Taylor thinks it's A. Kay, what do you think? Okay, A as well. Okay, perfect. Y'all are correct. So I'll explain these answers as we're going through them. But basically, we mentioned this a few times earlier in the training. Someone can be barred for violating the standards of conduct. So it's really important that you try to avoid that. Question 3. If a taxpayer offers you a $20 bill because they're so happy with the quality of service that you perceived and their refund likely, what's the appropriate action to take? A, take the $20 bill and thank the taxpayer for the tip. B, tell the taxpayer it would be better if the $20 deposited directly into your bank account from his refund. C, thank the taxpayer and explain that you cannot accept any payment for your services. Or D, refer the taxpayer to the tip jar located in the quality review area in the print section. All right, so I'm seeing C, I think from both Kay and Taylor, and that is the correct answer. Great job, y'all. Basically, we can't accept tips. We know this. We've gone over this. And the one thing I'll say here is like tips aren't always money. Like tips can be gifts and things. So like there's a client who in my earlier days of doing taxes would always like, she knew we couldn't take tips, but she'd always would like leave, like she'd like be like, I'm gonna make you some curry goat, and then she'd make curry goat every year, and she kind of like ring the organization doorbell and be like, this is for Darren, and then she'd like run away. And then basically we would eat the curry goat because we don't want the food to go bad. But all this to say, like tips really aren't just monetary. So like if someone brings cookies, we might share them as an organization and eat them. But it's important to like keep in mind that like we really shouldn't be accepting tips, and it can get us in trouble. All right, C. Question 4. Jake is an IRS certified tax volunteer preparer at a VITA TCE site. When preparing the return for Jill, let me scroll up a little bit more actually. Let me move the chat so y'all I can see y'all's answers. Okay, Jake is a certified tax law preparer at a VITA TCE site. When preparing a return for Jill, Jake learns that Jill does not have a bank account to receive a direct deposit of her refund. Jill is distraught when Jake tells her that her paper check will take 3 or 4 weeks longer than the refund being direct deposited. Jill asks Jake, wow, these names. Jill asks Jake if he can deposit her refund in his bank account, and then turn the money over to her when he gets it. What should Jake do? Okay, so option A is Jake can offer to use his bank account to receive the direct deposit and turn the money over to Jill once the refund is deposited. B, Jake should explain that taxpayer's federal or state tax return. Jake should explain that taxpayer's federal state return cannot be deposited into the VITA TCE volunteer's bank account. She will have to open a bank account of her own and have her own name on it to have the refund deposited into it. So basically, she can't use a family member's as well. And C is Jake I kind of answered this already. C, Jake should suggest she borrow a bank account from a friend because the taxpayer's name does not need to be on the bank account. So the answer to this, I saw the guesses that came in are B and B, or B question mark and B. And y'all are right. The answer is B. Basically, the taxpayer's name has to be on the bank account. They can't say, oh, if they say this is my friend's account, even if you don't see the name, like it's important that it goes to them. And the reason for that is if it's the friend's account or if it's the volunteer's account, once the money's in their account, they can do whatever they want with it. Maybe they never give it to the client. It just like opens up a good bit of liability that can put the client at risk. So like to protect them, really, and their refund, they want to make sure that the bank account is something they have complete control over, that they're not at someone else's will, and depending on some friend or family member to give them the money that they're entitled to. All right, so last one we're going to do together before I release y'all to do the final 5 and give you like 5 minutes to do them, or you can put in the chat when you're done a little early. The next one is about Max. So Max prepares a tax return for Allie at a VITA TCE site. Small aside, TCE is tax preparation for elderly folks. it's very similar to VITA, but also a little bit different. So just know that like anytime that it says VITA TCE, it's like a tax program focused specifically on doing taxes for folks that are a little bit older. Okay, back to the question. Max finds out during the interview that Allie has no health insurance. After Allie leaves the site, Max writes her name and contact information down to take home to his wife, who sells health insurance for profit. Which of the following statements is true? A, there's no voluntary standards of conduct violation, unless Max's wife is making a big commission on the sale of health insurance to Allie. B, Max has violated the VSC because he's using confidential information to engage in a financial transaction to further his own or another person's interest. C, Max is doing Allie a favor by using her professional information to secure business for his wife. Or D, wow, that's funny. Or D, information that a taxpayer provides at a VITA site can be used for volunteers' personal gain. So it's definitely not D. It's definitely not C. It definitely is not A. There is a violation happening. So you all are both correct. The answer is B. Max has violated voluntary standards of conduct because he's using information for personal gain or stuff for his wife's personal gain in this case. Whew. So with that, y'all, we're gonna take 5 minutes. So I'm gonna drop this link in the chat because I haven't yet. So if you pull up this document and go to page 17, or I guess page 18, you'll have access to all the questions. I'll also keep them up on the screen and I'll scroll. I'll probably scroll, every minute or two. So, but what I want y'all to do is answer questions 6 through 10. I'm going to go on mute, and then if y'all can just drop in the chat when you're done, we'll go through them together. And if you have questions, of course, y'all come off mute. It can be a good chance for us to talk through something. But I'd say let's take 5 minutes. Let's say at 11:07, which is it's 7-8 minutes. We'll come back unless y'all both catch me that you're done beforehand, and then we'll go through them together then. Hey y'all, my mom's hey y'all, I stepped away for a second. My mom's house alarm went off, so if you were asking a question, apologies, I ran away. I'm gonna go back on mute, but if you need anything, just unmute or chat.
No worries. Hope everything's okay.
Yeah, everything's fine. There's just like this piece of the house where it always goes off, which is anyway, it's dumb. Anyway,
Yeah,
go
totally
back
get
on
it.
mute. All right, y'all. I love this suspicious amount of suspicious amount of A's here. That's fantastic. All right, y'all. So let's go through these together. I'm both looking at your answers and gonna kind of look at the questions. I won't read them all, but I guess I'll talk about like the theme of the question. Maybe I will read them all. I don't know. I'm like trying to think of the best way for folks on the recording. I'll quickly read them, and then I'd love for you all to come off mute and explain your answers, just so it can be a bit more engaging. So number 6 is Bob, an IRS tax law certified volunteer preparer, told a taxpayer that cash income does not need to be reported because IRS does not know about it. Bob indicated that no cash income on Form 13614C. So Bob basically said, I don't have cash income when he filled out the intake form. Bob prepared a tax return excluding, man, I'm getting confused. Bob prepared a tax return excluding cash income. Jim, who is the quality reviewer, was completely unaware of the conversation. He didn't know there was any cash income involved in the return. It was printed, signed, e-filed. Basically, who violated the volunteer standards of conduct? Bob, A, who's the volunteer preparer, Jim, who's the quality reviewer, Betty, who's the coordinator, or D, no one. And yeah, maybe Taylor, would you mind coming off mute and saying why you think the answer is? What do you got?
Sure. Okay, I wasn't super sure about this one. But I picked Bob because he knowingly did something that was like untrue. Whereas like Jim had no idea.
Yeah, that's exactly right. So the correct answer for this one is A, Bob, who's the volunteer. And basically that's what it is. If someone tells you something but the quality reviewer has no idea, they like can't be at fault because they just had no idea. Same thing for Betty, the site coordinator. She just didn't know. So cool. The answer is A. The next question, question 7. Sue is the VITA volunteer coordinator. She's watching the local news when she saw Aaron, a tax law certified volunteer, in a story about several bank employees being arrested for suspicion of embezzlement. Oh, Aaron's been bad. She saw Aaron being led out of the bank in handcuffs. Ooh, that's really a bad look. 3 days later, Sue is shocked when she sees Aaron show up at the site ready to volunteer, apparently out on bond. Sue pulls Aaron to the side and explains that his arrest on suspicion of embezzlement could have a negative effect on the site. Therefore, she must ask him to leave. Sue removed his access to the software, and then she uses an external referral process to report details to the IRS by sending an email to wi.voltax@irs.gov. Did Sue take the appropriate actions as the coordinator? So the options are A, yes, she did, or B, no. Kay, do you mind coming off mute and talking about your answer?
I was just gonna do that because these questions and from the publication, the link what you put up are different.
Oh, are you on the right page? Are you on page 18?
Yes.
Oh, that's strange. It should be.
I have the same questions on my document, although it looks like page 16.
Oh, okay, it should be page 16 on here, but like page 17 or page 18 on here. It's like.
So it's 16 and 17 on the PDF.
Okay.
Oh, okay. So now I'm looking at 14 because those was the retest questions that I was looking at.
Okay. That's a good point, actually. So this is a great point. Is the retest questions are really similar, but not exactly the same. So that makes sense, actually. So then I guess just looking at this one, Kay, like, what do you think? Do you think that Susha did something differently? Do you think she did everything right? Like, just talk us through it. It's okay if you don't have the, it's a safe space.
Hold on.
You're good. And I can talk through this one too if you want to like jump a little ahead, and then I can ask you about the next one if that makes more sense. I know it's like a lot. It's like a lot of words.
I will say A, yes.
All right, that's right. That's correct. So the answer is A. Sue basically did everything right. I talked about this a little bit as an example before, but yeah, so Sue got it right. And I mentioned this email address and put it in the chat earlier for y'all. So just know that, if anything like that kind of thing happens, I would be sending that kind of email, but also you all have the freedom to do it as well. All right, question 8. Heidi, a volunteer certified volunteer, a volunteer standards of conduct certified volunteer is working at an intake station. As part of her duties, she's required to explain to the taxpayer what they're expected to do today as part of the return preparation process. What should Heidi tell them? A, complete Form 13614C, intake and quality review process. Has to be completed before preparing the return or intake and quality review sheet, apologies. B, you will be interviewed by the return preparer and ask additional questions as needed. C, you participate in the quality review of your return by someone other than your return preparer, which is true. The quality review is a different person. Or D, all of the above. And for this one, you both put D, so I'm not going to have y'all talk through it, but do y'all have any questions about this one? Did this make sense?
It like trips me up a little bit, just because it said like intake station. So I was like, oh, are they like solely doing intake? And I was like, yeah, the intake person does need to be asked questions still. So that helps.
Yeah, that's a good point. I feel like these questions are often like trying to trip you up with like a word or two. So it's like a good observation that like sometimes it's trippy, sometimes it's not. All right, cool, y'all. So we'll go on to question 9. Let's see. So question 9, during the intake process, a volunteer should verify a taxpayer and the second taxpayer if they're married filing jointly. Has a government issued ID? Additionally, taxpayers must provide verification to the taxpayer must provide verification of taxpayer identification numbers, which basically means a social security number or an ITIN number for everyone listed on the return. Is this true or false? And maybe Taylor, would you like to take this one? And then Kate?
Sure. Yeah, I picked A, true. Because I think I remember from last year that I needed to ask for multiple social security numbers for people. So I based it off of that.
Yeah, that's exactly right. This is the perk of being a volunteer for multiple years. You already know the answer, and it's just you don't have to think about it.
Yes.
So cool. That's perfect. All right, let's go on to the next one. So last question for this exam is question 10. Mary, a volunteer standards of conduct, a VSC certified greeter, reviews a taxpayer's completed 13614C, which is just the intake form. Page 2. To identify what potential volunteer certification level is needed for this tax return. Mary sees the taxpayer has checked yes in the box indicating that she has self-employment income, and the certification level next to this question is in parentheses A. All other questions that have the answer yes have a B certification level. When Mary assigns the return to the tax preparer, what tax law certification level does the tax preparer need to be? A, advanced, B, basic, C, it doesn't matter, D, no tax law certification necessary. Kay, what do you think?
I would say A because one of the boxes is checked A for advance. So if one is checked A, I would say A.
Yeah, that's perfect. One is checked A. That's correct. Y'all crushed it. Good job. You already finished one certification test. Volunteer standards of conduct done. Good job, everybody. I feel like I'm like somebody in a workout video. It's like, oh, good job. Anyway, but yeah, y'all. So great job, y'all. We're gonna go on to the next test here, and then we'll take a little bit of break after that. But unless y'all need a break now, basically, like, should we power through, or how are y'all feeling?
I'm fine with doing this one and then afterwards break.
All right, cool.
But I just got here, so maybe I should defer to Kay.
That's fair. Kay, you feeling all right?
Yes, I'm good.
All right, cool. Let's keep going, y'all. So for this one, I think let's do this differently. If y'all can do, let's do the first 3 together, and then I'll release you all to do the last 7. And then you can drop your answers in the chat. We'll do the same thing we did last time. And this time I'll pause the recording so the recording people don't have to see it. Just like waiting around. But okay, so question 1, which volunteers must pass the volunteer standards of conduct certification? A, coordinators, B, quality reviewers and tax preparers, C, greeters, D, all basically VITA volunteers must pass the volunteer standards of conduct certification test. What do y'all think? Please drop your answer in the chat. A, B, C, or D. All right, D's all around, and that's correct. That's definitely right. My like little cheat sheet actually has the wrong answer though. Like, how did I write that wrong? That's definitely right though. The answer is D. I hope the rest of these are right. We'll see. Okay, cool. Number 2, failure of a VITA volunteer to comply with the volunteer standards of conduct could result in which of the following? A, a volunteer's removal from the VITA site. B, volunteer's inclusion in the IRS registry to bar future VITA activity indefinitely. C, termination from a sponsoring organization's partnership with VITA, which would be, in this case, Catalyst Miami's partnership with IRS. Or D, all of the above may be considered appropriate actions depending on the type of violation and the sponsoring organization's corrective actions. All right, so it looks like D's for both. Looks like we got 2 D answers, and y'all are correct. We've talked about this already. I think in a way, but maybe not directly. But basically, VITA volunteers can be removed if they violate the standards of conduct, but also Catalyst Miami could be able to never prepare tax returns again. So, you know, it's both like think of your needs and the clients, but also of the organizations and how we all want to help people and continue to be able to do that year over year. All that to say, like, I've been volunteering with VITA for 12 years. I've never heard of a site being closed down because someone did something like this. Like, I can't imagine how bad it would have to be. So, you know, like, please, like, you know, stick to the standards, but also like, don't expect that to happen. It likely will not. All right, question 3, is having a donation or tip jar in the quality review station within the VITA TCE site a violation of volunteer standards of conduct? A, yes, B, no. What do y'all think? All right, so we got 2 A answers, and y'all are correct. Basically, you can't have, basically, tips are not accepted. So like things that promote having tips are not allowed. So yeah, that's the short answer there. So now I'm going to turn it over to y'all for these next questions 4 through 10. Take a few minutes and go through these questions, and do y'all, you know, basically you both have them up, you both feel good about answering them, and we can come back in just a few. I'll take your silence as a yes. Okay, cool. I'm going to stop sharing so that I can pause the recording so folks who are watching this don't just see us hanging out for a second. And y'all, let's plan to begin back at 11:20 unless you finish before then. Cool. So welcome back, everybody. We've got the answers to these questions from the intake and quality review exam. We're going to go through them together. We'll talk through them. It's going to be good. We already did 1 through 3. Now let's focus on question 4. And I'm going to share my screen so we can look at these questions. And we'll keep up the pattern of that we started last time, where I'll read the question and then I'll ask one of the volunteers to talk about their answer. We'll get there together. All right, so question 4, and this is going to you, Taylor, and then we'll do K, and then Taylor, K, yada, yada. So question 4, Maggie wants a refund quickly. However, she doesn't have her bank account for direct. Oh, wait, did I do this one already? No, this is right. Okay, sorry. Maggie wants a refund quickly. However, she doesn't have a bank account for her direct deposit. She asked Josh, the tax law certified preparer, to direct deposit a refund into his checking account and turn the funds over to her when it's received. If Josh agrees to do this, has he violated the volunteer standards of conduct?
So I put yes.
Oh.
Because
Go ahead, Taylor. Sorry, I realized I messed something up.
I put yes because the money has to go into the client's account.
Okay, so that's correct. The answer is yes. So the thing I realized that I was doing wrong, and I should have checked this when Kay said, like, these are not the same questions I'm saying, is sorry, y'all, we're actually on the retest questions. And now I'm like, have we been doing the retest questions the whole time? I think we have. So let's actually, I'm going to scroll up and go to the test questions. Oh, okay. No, I know what it is. Sorry, y'all. We're still in the intake. Wait, is this right? So I apologize, y'all. So let's regroup. Let's do these together because I think I have messed this up for you. So we should have been doing the intake and quality review test questions. And I had the retest questions up. So I think I gave y'all the wrong page because I didn't scroll far enough. So this also explains why one of my answers was incorrect that I had from my little cheat sheet. Okay. So y'all, let's go through these together and we'll just do them all together and I'll ask each of you to give an answer and you can do it live and we'll we'll go through it together. And Kay, some of the answers you put may be the correct ones for this. I think I just did this wrong. So apologies, y'all. Thank you for your patience with me. Yeah, we haven't done this question number 1 yet, have we? I don't think we have.
No, this is new, I think.
Okay, cool. Sorry, y'all. This is what happens. I feel like this is life. We're dealing with it. So number 1, I'm reading the question. Taylor, this is going to you. We're answering live. It's going to be good. All IRS certified preparers participating in the VITA TCE program must use Form 13614C along with an effective interview for every return prepared at the site. True or false?
True.
All right, that's right. True, which is what I had at first. A. Okay, so the rest of these are going to be right. So 2, K, this is going to you. What should a certified volunteer preparer do before starting the tax return? A, make sure all questions from 13614C are answered. B, change unsure to yes or no before the conversation with the taxpayer. C, complete all certified volunteer preparer shaded area questions on Form 13614C. Or D, all of the above?
I'm going to say D.
All right, that's right. D, all the above. And like a pro tip, it's typically all the above and it's these questions. It's not always, but like it's very often. All right, number 3, Taylor, this is for you. When reviewing Form 13614C, you see the interest question is marked yes. The taxpayer gives you a Form 1098T, or sorry, 1098, sorry, 1099 INT, which we'll talk about what that is later. Should you ask the taxpayer if they had any other interest income? A, true, B, false?
A.
That is right. So it's really important that you always ask the client if they have any other income information that isn't documented. And for interest forms, they don't have to send, the bank doesn't have to send one unless it's over a certain amount of money. So they may have got some small amount of interest. So you just want to make sure that you ask. All right, 4, K, this is coming for you. VITA TCE sites are required to conduct quality reviews. On A, all returns prepared by volunteers who have less than 2 years of experience. B, every return prepared at the site. C, only when there's a quality reviewer available. Or D, all returns prepared by volunteers with certification levels below advanced military or international.
I'm going to say B.
All right, that's the one. B is it. Good job. Basically, y'all know this already. Every site's got to be, every return has to be reviewed by a second person who's a quality reviewer. Number 5, Taylor, this is for you. Do you not need, what an odd question, do you not need to see proof of cash donations made by a taxpayer if you feel that the information is not unusual or questionable? A, true, B, false?
Oh, this one's hard, I feel like. I think A.
That's right. So the answer is A. And the reason for this is basically, y'all, the thing to remember when doing taxes for people is like, don't assume something is wrong unless like you think something is wrong. Like if someone tells you like, oh, I donated $250 to Catalyst Miami, you don't need to be like, well, where's your receipt that the development director sent to you? Otherwise I can't put it on the return. Like, no, don't do that. Just like, that's like, great, donate $250 to Catalyst Miami, ask them for the date because you'll need it, put it in the tax return, good to go. If they bring a receipt, fine, but we really are in that like habit of trusting tax preparers. There are some things we can't like just take their word for it on, like on a W-2 because it's too precise. But for things like that, it is okay to just, if they say, I made a cash donation, it was to here, and it didn't seem strange, you can just say like, that's fine. Cool. If someone says something like, I gave the maximum donation amount I could possibly give to charity, how much is that? Then like, then you're probably like, how much did you get? Like, like listen to the context clues. It'll be fun. All right, Number 6, in most cases, a volunteer must review photo identification for every taxpayer to deter from the possibility of identity theft. True or false?
I'm gonna say A, and I would say not in most cases. I would say in all cases.
Yeah, that's right. It basically is in all cases, except for there's like some slight discretion for the site coordinator. And an example of something that like might be true is like a client has been doing the tax with Calais Miami for the last 5 years. Like I personally know them at this point very well. I know their face, but they like, you know, had something happen where they lost their ID the day before. But I know them and we have record of it from a prior year. We can make an exception and like let them be fine. But you're right. In most cases, we really, really should happen. All right. Number 7, what does a tax preparer sign? Sorry, when does a tax preparer sign the tax return? This is kind of a confusing question, so I'll like take my time reading it. So it's basically like there's 2 things happening: before the quality review, or after the quality review, or before they've been advised or the return is their responsibility and everything should be accurate, or after the return has been prepared and they've informed that everything's responsibility and that it needs to be accurate. So looking at these, I won't read through them all. Taylor, do you have a guess for which what the answer might be?
Yeah, I think it's D, which is after both of those things.
Yeah, that's correct. The answer is D. Basically, folks need to sign their return as like one of the last things they do. They sign it and they get a copy of it, and that's it. Everything else should happen before that, including them being notified that this is their responsibility. And I think folks sometimes wonder, like, is that a little awkward? How do I bring that up to the client? And I think it's pretty casual. What I typically just say is like, hey, heads up. So, you know, just wonder, you know, we've gone through the return together. I explained it all to you. Just want to make sure there's like nothing else to add and like let you know that this is like, we prepare the return, but ultimately like this, you're responsible for making sure it's accurate. So if there's anything else to add, just let me know. And then folks typically are like, nope, you got it all. This is great. Thanks for everything. Almost never are folks like, oh, left off this extra $50,000 that I made and didn't tell you about. You know, that just doesn't happen. Great. Question number 8. The site is busy with many taxpayers waiting to be assisted, or waiting for assistance. In our case, this would be like waiting in the waiting room in Zoom. All volunteers are busy preparing tax returns. Can you quality review the return you just prepared instead of waiting for someone else to quality review the return? A, yes, if it's a returning taxpayer. B, yes, with approval from the site coordinator. C, no, self-review is never an acceptable quality review method. Or D, no, unless you are certified at the advanced level.
Well, I would say D. No, I would say C. I'm sorry. No self-review is never an acceptable quality.
That's right.
Review method.
You can't do it. You know, maybe tempting, but don't do it. It's not allowed. So sometimes what will happen though is if a client, if we're doing a return and no one's available to quality review it right then, we may let the client know that like no one's available to QR right then. Is okay if we call you back and do the QR with you another time. Or most likely, like if it's a busier day, we'll just ask the client to hold on for, you know, we're a little bit backed up. It may take us 20 minutes for someone to get to the QR. Do you mind waiting? And most time the appointment slots are like for an hour to an hour and a half. So people typically like have the time reserved already and are like, yeah, it's fine. Like I'll just wait. And they do. All right, question 9. Which of the following is true? A quality review can be conducted by a volunteer preparer certified at basic when the tax return is required and advanced certification to prepare. B, the quality review is conducted after the taxpayer signs the tax return. C, a quality review is an effective tool for preparing an accurate tax return. Or D, taxpayers do not need to be involved in the quality review process. So Taylor, which do you think is true?
C. C.
Oh, that's right. Sorry, I was like looking at my bank and I was like, that's not right, but it wasn't. The answer is C. That's correct. Basically, it's an effective tool to make sure that we're all doing a good job of preparing accurate tax returns. All right, last one, y'all, for this test is, as a part of the intake process, each site must A, have a process to ensure the return is within scope of VITA. B, identify certification level needed to prepare the return. C, have a process to ensure volunteers have the certification needed for the returns they prepare. Or D, all of the above.
I'm going to say D.
All right, that's perfect. We got it, y'all. So we did it. second certification exam done. We got all the answers. Y'all about to take the test in just a bit. Oh, and now I'm seeing there's some stuff in the chat that I missed. Oh, okay, great. Thanks, y'all. Also, thanks y'all for being patient with me as I sent you down the wrong path and had you answer the retest questions for one of the other tests. More questions are always better, right? Like more practice can't hurt. So with that, y'all, we're gonna take a quick break. If it's okay, y'all, let's do. I'm thinking let's do a 5-minute break, and then we'll come back, do a pop quiz. So I'll ask you about a few of the things that we just went over, and then we'll talk a bit about filing statuses before lunch. Maybe answer a question or two, and then we'll break for our lunch break. Does that sound all right to y'all?
Yep.
All right.
Cool with me.
So perfect. I'll see y'all back here at 11:42. All right, everybody. So we're back. Yeah, so we're back, and yeah, we're gonna chat. We're gonna chat about some filing statuses and some other things. And but before that, I've got a quick pop quiz. So this is not formal. There's basically 2 quiz questions I'm gonna ask y'all, and maybe one of you can take each one. This will be volunteer opt-in, so I'll leave a space. If you can't come off mute, that's okay. But okay, so the first pop quiz question is, are you legally responsible if tax returns are wrong? Yes, no, true, false. One of you mind answering?
Can you repeat the question?
Yeah. Are you legally responsible if tax returns are wrong?
Yes.
So it's a complex question because the answer is not simple. So basically the answer is like no, unless you knowingly prepare a false return. So if someone tells you like I made $1,000 of cash income, and then you're like, we're just not going to include that because it's going to make it more complicated for you. In those cases, you can be liable, but otherwise you will almost never be liable, basically. Yeah. Cool. So next pop quiz. Does that make sense? If you have questions, y'all unmute or chat. But the next question is, who do you have to do the intake and quality review on?
On like
who must you use it on?
Every filer.
Yeah, that's right.
Yeah.
Y'all are right. We talked about this till we're like blue in the face. Everybody. You got to use it on them. It's required. If not, we'll get in trouble. And honestly, we wouldn't want to not use it because I feel like it helps. It like helps in so many ways. So that's great. Y'all continue to be flawless in your execution of pop quiz and certification quiz questions. So so with that, y'all, we're going to talk about 2 things. We're going to talk about who has to file. We're going to talk about the 1040 kind of very broadly, and then we're going to talk about filing statuses, and then that'll be it. And then we'll take a quick break for lunch. We may answer a question about filing statuses before we break, but that'll be about everything. So first thing that I want to bring up is just we're going to talk about who has to file taxes. And the thing to keep in mind about filing taxes is, while not everyone has to file taxes, it may be better for most people to file taxes. And the reason that you would want to file is because it gives IRS a record of who has filed, and they know that no one can do identity theft against you because you filed first. And basically, like, lets IRS know what your income was like. It protects you from identity theft, and it can prevent you from penalty and fees if you do owe. A lot of folks don't know this, but if you file taxes and you have a refund, there's no penalty. You just could miss out on getting the money, but you got 3 years to file and get it. If you file taxes and you owe money, basically, like, the penalty for not filing taxes within that first year of it being due is like the biggest penalty. It's better for you to file taxes and owe money, And it's like a big difference. So it's like it's like a 5% every month for the first year, or like 0.5% every year or every month for the first year if you file but just don't have the money. So basically, it's better for you. It's better for most people to file taxes even if they don't have the money, and then just set up a payment plan with IRS to pay it over time. All right, so I'm going to share my screen for a second, for a bit actually, and we're going to go through. So for the rest of the training, we're going to look at this form pub, or with this publication 4012 when we're talking about different topics. And this is kind of meant to be a visual aid. We have a few of these available at the office. So, I mean, we have like 40 of these available at the office, like more than we probably could use. So next week, Alyssa's going to be sending them out via mail to everyone who registered through the Catalyst Miami intake form. So both of you will get a copy of this via mail. Taylor, for you as an option, if you do happen to go into the office between now and I think Friday next week, if you want to pick one up, you can. I think they're in Alyssa's office, but just an option. So with that, y'all, we're going to talk about who must file and what situations people must file, and then we'll get into filing statuses because it goes hand in hand. So tab A, so this 4012 I already mentioned is broken up into different sections, and this is tab A we're looking at. So it'll say, tab A, who must file, and the training really follows these tabs in the book. So if you're like, oh, where are we? We're basically going to go to tab A, tab B, tab C, yada, 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 as we talk about these different topics. And they also follow the flow of the tax return in the 1040. So in just a bit, we'll look at a 1040, fill one. We may have time to fill one out together today, and like understand how that's going to happen as well. But cool. So the next page on this tab is just a blank page. And then from there, there's this really useful chart around who must file. And basically, to determine whether a taxpayer must file, you basically have to know their filing status. And then based on that amount, if they make it, based on that amount and their age, this chart will tell you whether they need to file or not. So if you're single and you're single under 65 and you made more than $12,000, basically you're required to file, and IRS is expecting you to file a tax return. If you're over 65, that number jumps up to be 14,000 and some change. If you're married filing jointly, the number jumps up to be 25,000. If you're head of household, that number is 18,800. Basically, for folks that are, folks that are making money, if you make more than this, you're required to file. But even if you're not required, it still may be to your advantage to file. But especially if you're like someone who's head of household, we'll talk about what that means in a little bit. But if you're filing head of household, which means you've got a dependent, you could be missing out on getting the child tax credit, the earned income tax credit. You could be missing out on getting money you had withheld from your paycheck. Same thing is true for single people. So all this to say, like, it's often better to just file and find out, are you going to get a refund or are you not? And then see how much it will be. And if clients typically come in and say, like, clients sometimes will say, like, hey, I'm not sure if I want to file taxes with you. We'll typically say, like, hey, that's fine. We'll do the taxes. We'll prepare them for you. And then if you don't like what you see, you can always walk away. We'll just disregard the return. I think we see less of that happening in the virtual space because I feel like there's like a bigger commitment. But if that does happen, it's okay. And we'll, sometimes you just, spend an hour or two preparing a return and the person walks away, and that's okay. So all this to say, based on the filing statuses here, that will determine whether folks need to file. Next, I want to show y'all. So this is related to who needs to file a little bit, and in particular related to this, the over 65, under 65 thing. So in prior versions of taxes, there were many, many different tax forms. The one that is most important and the one that applies to most people is the form 1040. And this is a copy of the 1040. I won't zoom in on it yet, but we'll go and fill one out in a little bit, like I mentioned. But basically, this lets you enter your basic information, your income, your dependent information, whether anyone claim you as a dependent, your social security number, all your wages, all your deductions, all your taxable income stuff, your standard deduction, any tax you have due, any credit stuff like earned income credit or child tax credit. Basically, this is everything, all the tax return stuff. It may link out to a smaller document, but it eventually comes back here, and this is like the tax return you'll show people and read with them. It also includes your refund amount and any amount that you owe, as well as all clients sign the tax return electronically when they're doing taxes with us. As well as there's information about Catalyst Miami down here. Although we're not a paid preparer, this is just kind of where the information goes, since we do taxes for free. And it shouldn't ever have the volunteer name listed here. So we'll make it so the software is set up so that you all are not listed, and it just is Catalyst Miami's information. They can call us back if they have questions. So this is the 1040. There's one other version of the 1040 called a 1040 SR in 2021. And basically, the only difference between this 1040 and the other 1040 is the font. This is a 1040 for, it says for seniors, but really it's for folks that just need to read a bigger font, whatever that may mean. And in the software, I think if you're over 65, it automatically generates this. So, you know, turns the 1040 from being 2 pages to being 3 pages. But other than that, it's exactly the same. Cool. So, okay. We talked about verifying identity already. Next, we're going to talk about filing statuses. So let's go back to the 4012. And all 5 filing statuses are listed here, but we're going to go. So there is one more chart I want to show you all about who must file. So this is a chart B for children and dependents. So basically, if you're a child and you have money, this like helps figure out like how much money you can make as a child before you need to file. Sometimes it's much less. Like if you have income from an investment, it can be much less for kids. But if it's wage income, it will be about the same as it is for an adult. And then there's other situations when you must file as well. And some of these say out of scope. So like someone has alternative minimum tax or AMT. We can't do that at VITA. We have been able to do it in the past, but they don't like for us to do it now. So it's out of scope. As well as household employment taxes. So if you like work for someone else who lives in your household, like you work for your parent or your parents work for you, then it can be a little tricky and that's out of scope. But basically, this page has some really nice examples of when you can file or when you would need to file. This is another one that is going to be really big this year. So this year, the child tax credit, many folks that have children received an early child tax credit payment. They got these payments from July through December, and they were $250 to $300 per child that's in their household. If you get those payments early, you're required to file a tax return, which should be most people who had kids because this was an opt-out program. So basically, like if IRS had a record of you filing taxes and having a kid since 2019 and they're under 17, they should have sent you these payments automatically. Not everyone received them, and we'll talk about how to help people to get them and miss them out later on. So, and y'all, I haven't been highlighting this. We're in tab A, just going through pages A1 through A3. So you'll know how to find, this who should file information there. And just like that, we're in tab B. So this is about starting a return and filing statuses. So this also has a copy of the 1040. And this is a really nice page because it breaks down where you can find the information for each of these tabs in this 4012 book. So on page, I think it's B2, B1, it's got a list of, so we're going through tab B now, which is basically just name, address, spouse information, social security number, filing status, which is also at the very top of the 1040 up here. And then from there, there's tab F and tab C, which talk about dependents and standard deductions. There's tab D that talks about income, tab E, which is about adjustments and deductions, tab F, which is about tax, and so on and so on and so on until the whole 1040 is done. So just know that this follows the flow of the 1040, and things are typically in order, but not always. Yeah. All right, so I'm going to skip ahead a few pages, and we're going to jump to a chart that I think is super duper helpful. So this chart is helpful in figuring out how to figure out whether a client has a certain filing status or not. So the important thing to remember with this chart is in the middle of this chart are the 5 filing statuses. They are married filing jointly, married filing separately, qualifying widower, single, and head of household. So what do you all think is the most popular filing status? What's the filing status that's used by the most people? What do you think? And y'all feel free to drop in the chat or come off mute.
Head of household.
Head of household is very popular, but not the most popular. It's a good guess, though. It's a very good guess.
Single?
It is. It's single. So believe it or not, most people who come to Vita sites are single, like by a lot. And this is true of Vita and true of everywhere else. Because like basically because there are more single households than married households in the U.S. Like this is how it shows up at Vita sites, but also in particular because folks are lower income. If you're single, you can qualify for Vita with a slightly higher income than you can if you have two household incomes. It's more likely you wouldn't qualify. So anyway, so single is the most popular, and single filing status just means it's really simple. It means you're filing taxes. You have no more dependents to claim. It's just you. You weren't married. You're, it's just you, no dependents, nothing. Now, head of household is probably the second most popular filing status, especially at Vita, and that is you're single, but you have a dependent that you take care of. If you're single and you've got a dependent, you qualify for head of household. And typically, the dependent has to be under 19 or under 26 and a full-time student. So those are kind of the things for head of household. Although you can't qualify with a parent dependent sometimes, even though they're a little bit older. If you take care or provide for your parent or a relative, you also can qualify for head of household. So the other filing statuses, the other one that is for folks that are don't have a partner is qualifying widower. So this is for if you have a dependent and your spouse has passed away in the last 2 years. So in the year of your spouse's death, you still file married filing jointly, but then in the next 2 years after that, if you don't remarry, you can file qualifying widower. If you remarry, you can't because you're married, so you can do one of the married filing statuses. And then after, so it's like the first year is married filing jointly, 2 years of qualifying widower. In that fourth year, you would then switch to filing head of household as long as your dependent still qualifies you for head of household. If not, you would switch to single. And then the last thing here is married filing jointly or married filing separately. So married filing jointly is the most common filing status for folks that are married. And basically just means there's two of us, we want to file taxes together and we're married. And this is like legal marriages is what I'll say. Often in Miami and places everywhere, really, people will be like, oh yeah, this is my husband or this is my wife, but they're not legally married. They just like have been partnered up for a really long time. And in their minds, they're together forever. So, they call them their husband and wife, but they're not married. So I just would, like in the intake questions, it'll ask, are you legally married? If someone checks yes on a box, you don't typically need to question them, assume that that's correct. But it's something to kind of clarify if you feel like you need to. That's married filing jointly. And then the alternative to that is married filing separately. And basically, this is a filing status for folks that may be married, but for some reason, they don't want to file with their partner. Maybe their partner has a good bit of student loan debt, and that student loan debt stops them from getting their refund, or they owe back child support, or they own a business, and the business has some debt, and they just don't want things to affect their tax return or want to keep things separate. That's what married filing separately is for. Married filing separately is also pretty widely considered, quote unquote, the worst filing status. Only because once you do married filing separately, you can't get many tax credits that you can get in all the other statuses. So you can't get the earned income credit. I think you still can get a child tax credit, but I'm not 100% positive, but you can't get things like some education credits. It basically like stops you from like benefiting from a lot of the tax code advantages that are out there. So just a heads up, that IRS really likes to discourage that. And if someone's typically filing married filing separately and their spouse is with them, and while we're preparing the return, I'll typically ask like, hey, is there any reason you all are doing this? And sometimes people will just say things like, I've always done it this way, so that's which way we're doing it, and we want to keep doing it. And other folks will say like, we don't have a reason, we just have always done it. And then you can talk to them about why it may be better to do something different, and then ultimately let them decide because it is their tax return. You just kind of encourage them and bring up the questions and let them choose. Whew, okay. So we're gonna do this decision tree to figure out my filing status, just so y'all can get some practice at doing it. So you're gonna learn a little bit about me. I am not married, but I'm not eligible. I'll let my girlfriend catch you thinking that I am, because I'm not. but I am gonna go through these questions, and y'all will get a chance to like learn a bit about how this works. So first question: were you married on the last day of the year? No, I wasn't. I was not married on December 31st, 2021. Did my spouse die during the year? No, I have never had a spouse, so no. And then do all of the following apply? My spouse died in 2019 or 2020. Well, no, I never had a spouse. So going down, do both of the following apply? You paid more than half the cost of keeping up your home for the required period of time. Well, I did keep up my house, so that's true. Um, and then a qualifying person, who is a qualifying person? Who is a qualifying person qualifying you to file as head of household, live with you in your home for more than half of the year? So no, I didn't have someone who is a qualifying person who lived in my house. So this is no, so I'm going to be single. And I am. So you all could see how this would work if someone had a child or if someone was married. This would be the same thing. Were you married on the last day of the year? Yes. Did you and your spouse live apart at all in the last 6 months of the year? No, we lived together the whole year. All right, great. The answer is no. You're going to file one of these married statuses. Good to go. And then if someone said yes, we lived apart for the second half of the year because we separated, you would do this to figure out whether they qualify for head of household or whether they qualify for married filing separately or married filing jointly. Ooh, that was a lot. I hope that that makes sense to y'all. Any questions about filing statuses? I don't think if there's anything else I missed out on. All right, cool. Hearing none. I see something in the chat. Nope. All right, cool. So hearing none, we're going to keep going. A few things I want to clarify actually before we go on is you can be single and still have a dependent. Just be aware that it's possible. It's quite rare, but it does happen. Most people who file single or who are single and have a dependent will file head of household. But if someone like, yeah, basically like we'll go through like the dependency test in after lunch, and we look at that. Sometimes someone can be single with a dependent. Just know that that is a possibility, but almost never happens. And then for the married statuses, just a heads up that if you're married for even a moment in 2021, that it counts. So if you got married on December 31st at 11:59 and you went to the courthouse and they were open and you signed right then, you could file married for the whole year of 2021, even though it's only for a second. And the same thing is true for if you have a dependent. So if you give birth to a friend of mine actually posted this on Facebook recently where this happened to him. He's like, oh, born on December 31st at 11:57 p.m. My adorable little tax deduction. And then there was a picture of his daughter. So basically, if your child is born, or if a client's child is born anytime before midnight on New Year's, then it's like they were alive the whole year and they'll get to claim them as a dependent. All right. Oh, and then for married folks, this is even true if your spouse died. If your spouse died in the year, you still get to count them as being alive for the entirety of that year, which I already mentioned, and then you can do qualifying widower after that. All right. An important distinction for head of household is you have to have taken care of those in your house. You have to be the breadwinner and like the person providing for those in the house more than anyone else. And there are some situations where you can be married and file head of household. And the most popular one is folks who are married and then they separate. One person leaves the house, the other person stays and has the kid or has their child. And then the person, they don't live together for at all in the last 6 months. As long as that's true, they can typically file head of household, and that's all right. All right. So other than that, I think we got all the rest of these. Yes, we did. A little bit more of a heads up on other credits you can't claim if you file married filing separately. You can't do the child tax credit. You can't do the dependent care credit. You can't do the earned income credit. I like have it on my notes now. There also is a credit for saving for retirement, and you can't do that either. So basically, it's like all these big, really, really good tax credits you can't take advantage of because you're doing married filing separately. One other little caveat with married filing separately is if you're doing married filing separately and one spouse itemizes on their taxes, the other spouse also is required to itemize. So it can like kind of like make for some weird tax situations. So it's just important that if you're doing married filing separately for somebody and someone wants to itemize on their taxes, they just know how it may impact their spouse as well. All right. And a few other examples of married filing separately and when it may be appropriate. A really popular one, unfortunately, is kind of victims of intimate partner violence or survivors of intimate partner violence, folks that have spousal abuse, may want to keep their finances separate, which makes sense. Yeah, so just a heads up that there are many reasons folks may want to do it. So you want to ask the question of are you sure you want to file the status? If they say yes, then just trust them and let it be fine. If they say yes after you talk to them, then it's totally fine. So cool, y'all. So we're gonna do an example, and then I think we're gonna break for lunch. So let me pull up 6744. We're gonna jump to the advanced exam. This will be the first of many. We're gonna be the person in this scenario's name is Karen White, and I feel like I don't know, someone at the IRS thinks they're funny because that's just anyway, this Karen over here. Let's keep it moving. So I'm gonna read the scenario to you all, and then we're gonna figure out what the best filing status for Karen is. So here's the scenario. Karen's husband, Fred, moved out of their family home in April 2021. She's not heard from him since. Karen and Fred are not legally separated. Karen has 2 kids, Avery, who's 12, and George, who's 15. She will claim them as her dependents on her 2021 return. Karen is 38. Karen earned $28,000 in wages. She also received $175 in interest and $12,500 of unemployment income. Karen made a cash contribution to the Red Cross of $650, and she doesn't have enough deductions to itemize her taxes this year. Karen paid all the costs of keeping up her home and to support Avery and George. Karen received her 3rd economic impact payment, or her 3rd stimulus check, which was $5,600 based on her 2020 tax return that was filed jointly with her husband. Oh, that's interesting. They all have they all U.S. citizens and have valid Social Security numbers. Karen, George, and Avery all lived in the U.S. all year. So with that, seeing what you know about Karen and seeing what it says here and what we just learned, what I want you all to do is take a second, use that chart that I just referred to. If it's helpful to you, I'll pull it up again. And I want you to think about, for Karen's situation, which filing status is best for her. So I'll give y'all 2 minutes to think about this, and then if you want to drop in the chat, that'd be great. And then we'll talk through and get this chart together and see that in a moment. If you need to access this chart on your own computer, let me chat this to you so you can. All right, so this is the 4012, and we're on page 44 of the PDF, or page A1. No, B8 is the page with the chart. So you can either just type in 44 here on your PDF viewer, or you can Control F and look for Control F and look for B8.
What's the page with the question?
Oh, great question. That's a good clarifying one after last time. Page 74.
Thank you.
And we're in not the retest, which is great. So I'll leave the scenario up with the question, and y'all take a minute or two.
Sorry, what was the page with the chart again?
Oh, yes, it is. Sorry, now my little chat bar is in the way. Give me a second. Okay, here we go. It's page B8 or page 44.
Got it. Thank you.
Yeah, great questions. Ooh, interesting, Taylor. Interesting. We'll chat about that. It's not a bad guess, but we'll chat about it. And then Kay, what do you think? Feel free to drop in the chat when you have a guess. Interesting. Dissension in the ranks. Okay, this is great. So Kay's guess is head of household. Taylor's is married filing separately, maybe. So y'all, let's look at this chart. So I'll review the scenario again. Karen's husband and Fred moved out of their family home in April, so more than 6 months, which is important to know. They're not legally separated though, but Karen does have 2 kids, Avery and George, and they're 15. Karen's 38. Cool. So looking at that, let's go to this chart. Were you married on the last day of the year? Yes, Karen was married. She's not legally separated. So yes. Did you and your spouse live apart for all the last 6 months of the year? Well, yes, they did. Fred, or whatever his name was, left in April. So more than 6 months. Yes. So then do all of the following apply? You file a separate return from your spouse. Well, yes, it looks like he left. So it looks like they'll be filing different returns this year. You paid more than half the cost of keeping your home for the required period of time. Yes, we know that she provided more than half the cost of keeping her home because it says so. Karen paid all the costs of keeping her home to support Avery and George. Great. Next, your home is the main home of your child, stepchild, foster child for more than half of the year. A grandchild does not meet this test. You claim the child at least as a dependent. So we know both of the kids she's going to claim as dependents. And then it says they live with her for the full year. Karen and George all lived in the US all year. Yeah, Avery and George. I'm looking to see where it says that they live together. It doesn't say live together, but we can basically like assume it. Yeah, she's not. Okay, yeah, it doesn't say specifically unless I'm just looking over it, but she will claim as dependent, so we know that if she's claiming as a dependent, it's implying they live together. So with that, it seems like the answer to all of these are yes. So for her, the best filing status would be head of household. Cool. So we did a lot, y'all. So I want to ask y'all how long you want the break to be. I think I planned for an hour-long break, but it can be shorter if y'all want to come back sooner. And then we could end the day a little bit early. Just wanted to ask, like, what do y'all think? Oh, actually, let me pause the recording also. For folks in the recording, thank you so much. We're going to take a quick break and come back after a lunch break, and we'll keep going and talk about a few other things. Thanks. All right, welcome back, everybody, to the tax training. Thanks for that quick break. We're going to dive in here and chat a bit about in this section, we're going to be talking about dependency exemptions and when you can claim a dependent and when you can't. We're also going to be talking about income and different types of income, what's within scope of VITA, what's not. We'll also talk a bit about, we may get to also talking about tax credits, and we're going to do an example 1040 as well. So all this to say, once we finish talking about dependent exemptions, we'll do, you can see the example 1040 and chat about a few other things. But before we start, and a shocker to probably no one on this call, we have a pop quiz, as we do when we come back from a break. And I have 2 questions. This first question is a popcorn question. I think you both can just kind of answer it as you see fit. Just shout out an answer or type an answer in the chat. But this question is, what are the 5 filing statuses? Maybe can I hear one from one person, one from another, and so on and so on.
You have single, head of household.
Oh, that's great. That's a great case. Let me stop you there. That's great. That's 2 great filing statuses. Taylor, can you toss in 2 more?
Yes, Kay said single and head of household, right?
That's right.
Okay, married and married filing separately.
Perfect. And what's the last one, y'all?
What is the last one?
The least common one. This is the hardest one. I can give it to you if you want.
Yeah, I can't remember off the top of my head.
It's all good. All right, so
The
the last,
widower.
yeah, there we go. My girl Kay coming through. That's right. So the last one is qualifying widower. Um, and my next question, and this is like a little, maybe it's like a meta question a little bit, but which one should people choose?
Most often?
Not most often necessarily, but like which one should people choose? Which filing status should clients choose?
The one that can get them the most benefit while being accurate.
Boom, that's right. That's the answer. Basically the best one for them that'll get them the biggest benefits possible. Awesome. So y'all, that's the, I think, did I skip a quiz? No, that's it. Okay, so that's all for now. There will be future quizzes. Brace yourselves. Oh, okay, this is great. The rest of the quiz, I think this is actually maybe the last one for today. There may be one more. There is one more. Okay. Anyway, so with that, y'all, we're going to talk about something that's a really important concept for taxes. We're going to talk about personal exemptions. And I should also pull this up in 4012. But so we're going to talk about personal exemptions and okay. We'll come back. So we're going to talk about personal exemptions and dependency. So basically, the way this works is we've talked about filing statuses. So we know that like the main folks that are filing taxes, have the filing status they're using, but also there's the people they're claiming as a dependent. And we're in that part of the 4012 that I'm going to share my screen that talks about who you can claim as a dependent and who you can't. Let's see. Here we go. All right, so we are in this part of the 1040. I feel like this must be it. That's not it. All right, other things get out of the way. Here we go. 1040. Okay, so we're in this part of the 1040. So far, we've made it through. We're still going to go through. But we're going to talk about dependency and why that's important. So the thing about dependency is basically you get one dependency claim per person. An example of this would be like, I have 1 cup of water that, is my cup of water. If I hand my cup of water to Taylor, it's now she's holding my cup of water, but it's still my cup of water. If I hand it to Kay, it's still my cup of water, but now Kay is holding it. And this is basically to demonstrate, so like you could have more than 1 cup of water, but this is to demonstrate that like there really can only be one personal dependency exemption per person per tax filing year. So regardless of who claims you, only one person can claim you. It's either going to be you're filing taxes yourself, so you're claiming yourself. Your spouse is filing taxes with you, so you're claiming with them. And then there's a possibility of claiming dependency exemptions for children or for older adults or for relatives that you're taking care of. And if someone else claims that person before you can, then their exemption is basically like lost for the year. So like one person can claim one person per year. And if like, let's say a child has shared custody with 2 parents that used to be married but are no longer married, one parent can claim the child, the other parent is not supposed to claim the child. If the parent who wasn't supposed to claim the child claims them, but the other person was supposed to claim it, basically the first person will be able to electronically file their taxes. The second person won't be able to electronically file. They'll have to paper file, tell IRS, hey, this is a mistake. I'm supposed to be able to claim this child. Then IRS takes about 6 months or so to kind of clear it up. So we typically tell clients if they're worried about not being able to claim their dependent or someone else may do it before they can, they basically should file as soon as they can. Like as soon as the tax filing season opens up, they should start filing taxes and make sure that they claim their dependent before anyone else does. There also is a little bit of a delay in for folks that have dependent children that are getting either the child tax credit or the earned income tax credit. There's a refund delay built into the tax program. So basically, this is like across the board. So whether you do tax with TurboTax or H&R Block or VITA, the IRS doesn't issue any refunds to anyone before mid-February if you basically have a child on your return. If you're single, then you can get it earlier, but they basically have said, we're not going to issue refunds to anybody who can get a refund, who's claiming a child and getting one of those credits and entitled to a refund until mid-February. That way they can see if 2 people tried to file at the same time or someone tried to file early, it like the goal is to try to prevent some of those conflicts from happening for them to be able to resolve them before paying out money to the wrong people. Cool. So I'm gonna come back to the 4012. Ugh. Okay, now this thing is in the way. Sorry, y'all. Just here we go. Okay. So now we're going to talk about dependents. And this chart here, so we're on page, let's see what page this is. Page C1 of the 4012. This tab is all about dependents, and we're in particular going to pay attention to this chart here. So there's two different types of dependency. There's a qualifying child and a qualifying relative. So we will chat through what each of those means. So this chart is really nice, actually. I think this is always really helpful to me each year with the certification, especially for some of the confusing scenarios. That basically, if someone can be a qualifying child, it's typically better, but there are certain limitations to who can be your qualifying child and who can't. And then if they can't, they also still may qualify as a qualifying relative, and you still may be able to claim them on your taxes. So to be a qualifying child, you must do all the things in this column. In particular, the child must be basically some descendant of you or a descendant of someone else is related to you. So son, daughter, stepchild, foster child, brother, sister, half brother, sister, stepbrother, sister, or descendant of any of those, or a child that was adopted. So if any of those things are true, great, they may be a qualifying child. If not, they're going to get bumped over to here. So this is actually quite broad, though. Like, you know, if you're claiming, you can claim your brother or sister's child, you can claim, you know, many folks basically. But it doesn't include some things like your parents. You'll notice. So just a heads up there. The next condition is age. So there's like 4 different tests they call them. The first is the relationship test. Do you meet this relationship test? The next is an age test. So is the child under 18 at the end of the year, and are they younger than you? They have to be younger than you. It's just like a rule. Or are they under 24 and a full-time student and also younger than you? So basically, folks that are a full-time student can claim up to 24. Folks that are not full-time students can do up to 19. Or C, any age and totally and permanently disabled. So if someone is disabled and has to have care and they're permanently disabled, then they can be claimed as a child regardless of age. The next one is a residency test, which is just, did the person live with you for more than half the year? If they didn't live with you, then you likely can't claim them as a qualifying child. The last 2 are, the child must not have provided more than half of his or her own support throughout the year. So basically, like, did you care for this person? Did you provide most of the support for them? And support is broad. Support can be, did they live with you and you paid the rent and they didn't pay any of it? Support can be like, did you make more money than them and you provided for them? Support can be, you know, you got them transport to school. It's like all the things that take up being like a supportive adult of someone else. And then the next one is the child filing a joint return for the year. And basically, this is to stop folks from, like, you can be a full-time student and 20 and married, but if you are, you're probably would be required to file a joint return, and no one will be able to claim you. Like, your parents can't claim you as a child in that case. So basically, if they're filing a joint return and a dependent, then there's like, you can't claim someone as a child, which makes sense. And number 6, if the child meets the rules to be the qualifying child of more than one person, you must be the person entitled to claim this child as a qualifying child. And there's a chart on the next page where we'll talk more about that. So that is qualifying children, and the next is qualifying relative. I'm going to pause there and see if folks have any questions. I know this can, you know, it can be a lot. It's a lot of words, a lot of concepts. It's okay if you don't, but just wanted to make sure there's no like lingering questions. Nope. All right, cool. So we're going to come down to this like tiebreaker chart in a second and look at this now. So qualifying child of more than one person. Basically, if the child meets the conditions to be a qualifying child of one person, only one or more than one person, only one person can claim the child, and all the tax benefits associated with that child. So that includes all the things listed here: child tax credit, earned income credit, credit for other dependents, head of household filing status, child and dependent care expenses and the deductions for those, to get dependent care benefits or in exclusion of income for that. Basically, like, only one person can claim that stuff. If the one person if only one person is the child's parent, the child is treated as the qualifying child of the parent. So basically, like parentalness like can win out. If the parent files a joint return together, they can claim the child as a qualifying child, and the child is treated as a qualifying child of the parents, which makes sense. So this is basically just like kind of outlining like if there are some tiebreaker rules, who kind of comes out the winner and can claim the child. So this says if the parents don't file a joint return together, both parents claim the child as a qualifying child. IRS will treat the child as the qualifying child of the parent with whom the child lived for a longer period of time that year. So basically, like if the child lived with you longer, you're likely able to claim them. And this is like an easy test because when you're talking to clients, you typically can ask, oh, did the child live with you most of the year or more than 50% of the year? And if they say, oh yeah, they did, and then they'll typically say something like, oh, they lived with me the whole year. Like, oh, they went away to their other parents for summer, but no, they were with me the whole year, the whole school year. They live with me, and that makes it easy for you to know. So the next thing is if the child lived with each parent the same amount of time, IRS will treat the child as a qualifying child of the parent who had the higher adjusted gross income for the year. So basically, the person who makes more income typically wins if everything else is true. And if no parent can claim the qualifying child, the child is treated as a qualifying child of the person who had the highest AGI for the year. So basically, all this is saying is like, if you make slightly more money, if everything else is true and you make a little bit more money, you can claim the child. Yeah, so that's like the long and short of this example. We'll talk about some tiebreaker stuff in one of the scenarios for one of the questions later on. All right, so if someone doesn't qualify to be a qualifying child, they can also be a qualifying relative. So basically, the first one just says the person isn't a qualifying child. So they didn't meet the conditions. The first thing to be a qualifying relative is they're not a qualifying child. The second is the person must be related to you in some ways, listed under relatives that who don't live with you. So there's a tab here that we'll look at in just a second. That basically is like this is inclusive of like parents who you take care of but don't live with you. They can be claimed as dependents and qualifying relatives on your taxes. The person's gross income must be less than $43,000 or $4,300. So basically, across all their work, they can't make more than that. And there's like a special rule down here for Social Security income. But basically, this is meant to say if people make more than $4,300 and they're not related to you, you probably can't claim them. You must provide more than half of this person's total support for the year. So, this is kind of makes some sense. But if you ever have doubts, like come to this chart. It's really, really helpful. Helps you kind of determine whether someone can be a child or a relative. And the software will do a lot of this on its own. But if someone's like, the most common example of this was someone will be like, oh, my boyfriend or girlfriend live with me. Can I claim them as a child? Or can I claim them as a dependent? So, if you go to this chart, you'll say, oh, okay, your girlfriend or boyfriend, they don't meet any of these and they're not your adopted child. So then we know they're not a qualifying child. So that makes this first one true as well. And then the person also can't be required to file a tax return. So if they need to file a tax return or they're required to, then you can't claim them on your taxes. But if the person is required to file a tax return, they either have to be someone who is related to you or someone who must live with you all year as a member of your household and the relationship must not violate local law. So this is like a small little asterisk, but it makes a big deal actually. In Florida, for a long time, there was a rule that basically like cohabitation was legal. So you can't like cohabitate with someone who is not your spouse. Like you can do it, but like it doesn't, it like breaks the law basically. Like you never get arrested for it or anything like that. But like basically it like in the books, it wasn't okay. And then a few years ago, they actually got rid of that law. So like before you couldn't claim, someone who lived in your house the whole year because it violated local law if they weren't your spouse or a dependent, but now you actually can. So then the next thing is the person's gross income for the year less than $4,300. If your girlfriend or boyfriend made more than that, you can't claim them on the tax. So if they made less than that, there's a possibility that you can. And then did you provide more than half of their support? If that is also true, then the person can be claimed. Cool. Ooh, okay, question. What about a 21-year-old child who's made $4,200? That's a good question. So they're 21. The most important thing about them being 21 is if they're a student or not. So like if we look at this test to see a qualifying child, the first question is going to be great. If they're related to you in some way, awesome. The next question is going to be they're over age 19, but they are under 24. So if they're a student, there's a chance of you claiming them as a qualifying child. And then everything else has to be true as well. And if not, you bump over here and basically they'll be a qualifying relative because it's still less than $4,300. So they qualify. So one way or another, you can claim them. Okay, yeah. If they're not a student, then they bump over here, be a qualifying relative. You can still claim them. And they would enable you to file like head of household or and claim the rest of the things that go with that if they're your only kid. If you have other kids, then you could already claim that if you're a single parent. How that made sense, y'all. So many words. So I want to walk through a scenario with you all to like illustrate this point. Let me pull up. Not a student. Well, I mean, they can be claimed. I know that it's like a lot, but they actually can be claimed. So just like not as a child, but as a relative. So like you won't get the child tax credit for them because they're too old. But you can still they'll qualify you for things like the earned income credit, which is great and like helps get money back, which is awesome. So yeah, we're gonna do question number 13. And there's always a question like this, and it's always really confusing to me. So this is like meant to illustrate this, and we'll walk these charts to see who qualifies and who can claim this person. CTC stops at 17. It does. CTC does stop at 17. Unfortunately, so unless they expand that, I doubt they will. It does stop then. So y'all, we're gonna read about Barbara Jacobs. So this is going to be a confusing one because we're technically reading about 3 people. Barbara, who is the mom in this scenario, Jenny, who is the daughter, and Marie, who is the grandbaby or the daughter's daughter. Oh, and we'll also talk a bunch more about CTC and earned income credit later on today. So we'll dive into that and the way it works, and y'all should keep asking questions about it. They also have changed a little bit in this last year, like a good bit in this last year. So we'll talk about what those changes mean and how they show up in the taxes and all that. We'll actually spend a lot of the time today, like both doing a demo tax return by hand and like talking a lot about tax law. And then I'm going to leave y'all with some homework to go answer some questions and come back with the answers for next week. We'll talk through those early next week and then like dive into just like starting to prepare practice returns when you come back next week. So just like a preview of what's going to happen. But we'll spend a lot of today talking about tax law and the way different credits work and that kind of thing. Okay, so Barbara, the mom, is age 57 and she was widowed in 2021. She owes her own home and provided all the costs of keeping up her home for the entire year. Her only income for 2021 was $3,600 in W-2 wages. So basically, she made $36K. She pays all the costs of keeping up her home. She was widowed. She's 57. Jenny, who is 24, and her daughter Marie, who's 3, move in with her mother Barbara. So Jenny is Barbara's daughter. She has a daughter as well, who's named Marie, who's Barbara's grandbaby. Jenny separated from her spouse in April 2021. And Jenny's only income for 2021 was $15,000 in wages. Jenny provided over half of her own support, but Marie did not provide more than half her own support. So because Marie is 3, obviously she did not work and provide her own support. Jenny will not file a joint return with her spouse, and she did not receive any advanced child tax credit payments for 2021. All individuals in the household are U.S. citizens with valid Social Security numbers. No one has a disability. They all lived in the United States all year, but not in a community property state, which basically just means there are some states where like the rules are a little bit different. Like Texas is an example of one where, things are treated a little differently. Florida's not one, so we're not going to worry about it. And the scenario doesn't call for it. So, okay, yeah, that's yes. So for question number 9, this is the question we're going to go through. For the purpose of determining dependency, Marie meets the conditions to be a qualifying child of who? Barbara, Jenny, both Barbara and Jenny, or neither Barbara and Jenny. So we're going to go through this scenario. Ooh, so Kay's got a guess for which one it is. She thinks both Barbara and Jenny. Kay, do you mind coming off mute and saying why you think that's the answer?
Because Marie is living in Jenny's home Barbara's home,
Hmm.
even though she's not her daughter. So from looking at the rules, Barbara can claim her as a qualifying child if Jenny decides not to, I believe.
Yeah, that's fair. So this is a good guess. So I'm gonna walk through just so the folks on the recording can see the thought process behind this. So first, let's do this for the mom, who is Barbara, I believe. Yeah. So first, let's do this for Barbara. So let's say Barbara claiming Marie, and then we'll do Jenny claiming Marie. So the child must be your son, daughter, or a descendant of any of them. That's true. Marie is Barbara's granddaughter. The child must be under 19. That's true. Marie is 3. The child must live with you for more than half the year. That's true. She lived with her since April. The child must not have provided more than half of their own support. That's true. She did not. The child isn't filing a joint return. That's true. And the last one is if the child meets the rules to be a qualifying child of more than one person, you must be the person entitled to claim the child as a qualifying child. So that's probably true. Now let's go back and do this for Jenny. Yes, Jenny, who's 24. So for Jenny, Marie is her daughter. For Jenny, Marie is still 3. Marie lived with Jenny more than half the year. Marie didn't provide more than half support. Marie isn't filing a joint return. So it seems like, basically, from this chart, they both possibly can claim her as a qualifying child. So we come down here to this test for people who can claim folks as a qualifying child. And I remember reading this one: if only one person can claim the child, if only one of the persons is the child's parent, the child is treated as a qualifying child of the parent. So it seems like this rule comes first and would enable Jenny to claim her. So I actually think that it's Jenny who's going to be able to claim her and not the mom. And that's like what we're going to leave off for now. So I believe the answer to this one is B. Let me check my little cheat sheet. Okay, wait. This is 9. Okay. Okay, so I believe this is right, y'all, but I'm gonna leave. So y'all will have some homework to do. So I want y'all to like take everything we've learned, and like this will be a part of your homework. So we'll come back and actually discuss the answer at the beginning of the next class.
Okay.
I'll leave this one a little open-ended, but I think it's hopefully fun. Cool. All right, so that is dependency. So the one other thing I want to point out to y'all is I scroll down to these pages, and what I would actually do if I was ever unsure is, so there's this chart, there's this table that we looked at that has these 2 examples, but also this is like more of like an interview style. So if you were a client were sitting in front of you, you could ask them similar questions. You could say, okay, so tell me this, can you be claimed as a dependent of any other taxpayer for that year? If the answer is yes, then you can't, no one else can claim. If the answer is yes, you can't be claimed as a dependent by another taxpayer. You may not claim anyone else as your dependent. So basically there's a question here, and like seeing this makes me think, like for the scenario we just did, what we didn't do is can Barbara the mom claim Jenny the daughter? But if that were true, if Barbara can claim Jenny, then we know Jenny cannot claim Marie, and then the answer would be Barbara can claim Marie. So all this to say, take a look, because this can help you think about things in a slightly different way as you're looking at the answers, and we'll actually go through them in the next class. Cool. So then, all right, we've done the scenario. Okay, cool. Great. All right, so we're gonna keep going, y'all. And we're gonna burrow through and chat now about different types of income. So let me pull up the page that we need. All right, so we're in tab D of the 4012, aka the tax Bible, and we're talking about income. So there are many different types of income, and this like two pages down from that intro page is just 2 different. This page kind of helps you kind of quickly see the two different types of income, which are taxable income and non-taxable income. So non-taxable income is down here at the bottom, taxable income is at the top. And basically taxable income are things that you basically have to pay taxes on. So this is wages, this is alimony in some cases. This is cash income that you make. This is interest and dividends. This is interest is down here. Any hobby income that you make. If you gamble, any gambling winnings, like these are all things you have to pay taxes on. If you go to jury duty, you got to pay taxes on that. If you get distributions from a retirement plan, like these are all things that if you get this kind of income, you have to pay taxes on them. And typically you have an option to have taxes taken out if it's like through an organization. If you're like a sole proprietor and you get paid for doing hair, then taxes are not taken out. You will have to pay them later when you file taxes. So there are many, many different types of income that are taxable income. And then there are different types of income that are non-taxable income, which basically just means that if you get these kinds of income, you don't have to pay taxes on them ever. An example of that is child support. So folks sometimes are like, yeah, I paid a bunch of money into child support. Can I get a tax deduction for that? Or can I get is that tax deductible? Do I have to report it? The short answer is no. Although some states will have like state rules that give you a credit for paying child support. So like in New York State, there's a credit for those that pay into child support, but not in Florida because we don't have state taxes. Things like the economic impact payment or the stimulus checks, that's not taxable income. So when folks get that thing, that money, sometimes folks are like, well, I don't have to pay taxes on this. No, you don't. As long as you're claiming the folks who you were supposed to and entitled to claim, you should never pay taxes on that. Gifts is another one that typically you don't pay taxes on. If you give someone like a large gift, like a $15,000 gift, then you can, but in most cases you don't have to. Meals or lodging for the convenience of an employer. So basically, like, if your employer pays for something for you and reimburses you, that reimbursement money is not taxable. Same thing for relocation. Social Security benefits is an interesting one because they're typically not taxable unless you have other income, and then a part of it can become taxable. And there's like a chart to help you figure out how it all works, but the software will do a lot of this for us. And there will be a question in the exam that's going to say, you earn this much in Social Security, this much in this other thing, how much of your Social Security is taxable? And we'll talk through that next week. All right, student loan forgiveness. Oh, this is super neat. So student loan forgiveness is not taxable. Basically, if you have student loan debt forgiven, there's been some small group that have had student loan debt forgiven, but not everyone yet. But if you have student loan debt forgiven, it isn't taxable, at least through these next few tax years, as well as Social Security income, SSI. If you get TANF or cash assistance or SNAP benefits, that kind of thing, those things are not taxable income. And I think that's most of what we have here. So basically, keep in mind two types: income, taxable income, non-taxable income. All right, there's a few more examples here. This is more kind of things for folks that are in the military, which we'll skip over. And scroll down a few pages to show y'all this. So we're going to look at, I went too far. Okay, I did. So we're going to look at this page here, which will just show you many of the same things we just looked at. For things that are taxable income, they have to be entered into the tax software. And this is basically a screenshot of the tax software that you'll see. So when you start, you'll enter basic information for folks. And then from there, you'll start to enter income for folks. And this is just what you'll see. And you'll be able to select enter W-2 income and edit it. You'll be able to add unemployment compensation, retirement income. And this is all organized by tax form. And what's nice about this is the clients typically will either come in with the form or upload the form to the software. So you'll see, oh, they've got two W-2s. Great, I know I need to add in W-2s. They've got one 1099-R. Great, this section says 1099-R. Let me click begin. They've got Social Security income. That's on an SSA 1099. Great, let me enter that here. They've got unemployment compensation and so on and so on and so on. But this will tell you basically what you need to enter, and those forms will actually appear, and you'll be able to see them and enter them just like they look on the form and into the software. There also is the other thing that I'll point out. There's two things here. One is small business income, which is quite common, where folks will either have income that's cash or they'll get a 1099 miscellaneous, which is like income that doesn't have taxes taken out. So it's just important that when that happens, there typically is an education moment where you can tell clients like, hey, so they may know it already, but it looks like you didn't have taxes taken out of this money. You may have to, you may have to pay some taxes, but let's see how it all kind of winds out because you may still end up with a refund. Let's just see. So you'll enter their income and their expenses. And after you enter both of those, the computer will do some calculation to determine how much they owe, what their refund is, and how it works with all their other types of income as well that may have had taxes taken out. There's capital gains and losses, which basically just is investment income. So this isn't very common at Vita sites, but it can happen sometimes where folks will have some investment stuff. I think it's more and more common every year because investing becomes a little easier every year with things like Robinhood and platforms like that kind of coming out, or Cash App having cash and Venmo having investments and that kind of thing. So just know that we can do those types of returns if we need to, and we'll get some practice doing at least one of them in the scenario a little bit later. All right, and then the rest of these are not very common. There is one down here for less common types of income. And there's a description here that says K1 earnings, gambling winnings, cancellation of debt. Those are probably the most common, less common types of income. Canceled debt just means that someone had some debt forgiven. So let's say you have a credit card with Bank of America and you owe them $4,000. Bank of America, but you're not able to pay it. So Bank of America may decide, hey, we're just going to cancel this debt so we can get a deduction on our taxes as an organization. So they'll send you a form that says, hey, we canceled this $4,000 debt, but because they send you this form and because this debt was canceled, it's now treated as income, and you've got to report that $4,000 on your tax return. So it's just kind of a thing to keep in mind that if someone had a loan or debt forgiven, like a student loan debt as well, they may send one of these forms. But for student loan debt, we know it's not taxable because we looked at it earlier. But for any debt that's forgiven, it's very likely they'll send a form that says, here's how much was forgiven. See if you need to treat it as income on your taxes. For gambling winnings, gambling is so basically if you go to Hard Rock Casino and in Broward County and you strike it big and you, I don't know, win roulette and walk away with $10,000, the Hard Rock's going to give you a form that says, here, I played roulette, I won $10,000, I lost this much money trying to play, and then you end up putting that on your taxes, and the winnings are income, and then the losses are deductible, or like an itemized deduction, which we'll talk about in a little bit. And then K1 earnings are just a type of income for small business owners and folks in partnerships. Whew, okay, that was a lot. So those are the most common types of income that we'll see. If y'all have any questions about income, feel free to come off chat, but or come off mute. But otherwise, I think we're doing good. We're kind of flowing through it. There are a few other types of income I actually will point out before we go on. One that's really common is tips. So folks will work in service work. They'll work in a restaurant. They'll drive Uber. Folks will get paid tips, and typically, you ask folks to report, hey, did you get any money in tips? They'll either say like, no, I didn't, or yes, I did, and then you just believe them. They'll tell you how much they made because it's not always documented. Sometimes if it's like a credit card tip, it's included on the W-2, but if it's a cash tip, it's not typically included. So you just ask people to tell you how much it is, and they'll tell you, and then you enter it. If they say it's nothing, then you believe them. Maybe the organization only takes credit cards, and all their tips were credit cards, so it's all reported on the W-2 already, which is fine. All right, cool. I think we did most of this through the script, making sure we didn't miss anything. Okay, there's one more thing we're gonna do for income type. Okay, so let's see if there's a nice chart to go with this. Looks like there's not. So I'll just talk you all through a few of these concepts. Yeah, I'll just talk you all through a few of these concepts. So a few other concepts to keep in mind for income are that rental income is not in scope of VITA unless you're military certified. So if someone comes in and they did Airbnb or they have a rental property they rent out sometimes, we can't do that unless we're military certified. So basically, like, refer it to Catalyst staff who have the best chance of being military certified, unless you get that yourself. And then we can double check your work and make sure that it's correct. And then from there, I want to explain a concept to you all. And this concept is tied to 1099s and 1098s. And I basically just want you to understand what they mean. So there's 1099 versus 1098. Okay, so a 1099 is a document. So basically, if you are receiving money, it's being paid to you, it's going to come on a 1099 tax form. And if you're paying money to someone else and it's tax deductible, then you're likely going to get a 1098 saying how much you paid. So an example, the most popular 1098 probably is the one for mortgage interest. So for those that have homes, if they pay their mortgage and they pay interest on that mortgage, they'll get a 1098 that says, here's how much you paid in interest, is tax deductible. And 1099s, the most popular ones are probably either a 1099 miscellaneous, which is for like contractors and self-employed folks that get paid by an organization, or there's a 1099-R, which is for retirement. So any retirement income, those are probably the most two common types, but just know that, again, 1099 is you're receiving money, 1098 is you paying money. Cool. And then retirement income. So the last thing, which you talked about this already, but there's Social Security income and there's income from a 1099-R. Basically, just know that most folks will come in with exactly the form you need. You'll enter it in the computer. It'll be quite simple and easy. If you ever have questions or doubts about it, then like reach out to us as your site coordinators. Yeah, unemployment will also be quite popular this year, just because of the pandemic. Like last year, we saw more unemployment claims than ever before, and we'll continue to see them this year. But unemployment is very easy. It comes on a form 1099G, 1099 because it was paid to you, and G for government. And you'll basically enter in the tax return. It'll be quite simple and easy. Okay. So we're going to practice entering tax returns in a little bit. In the software, likely tomorrow, basically, so y'all will get a chance to do that. But I do want to walk you through a scenario. Now that we finished through this income section, I think we're all done here. Let me make sure one more thing. Okay, great. We're going to do a practice 1040 by hand. That'll be the next thing we'll do, and then that's actually one more thing I want to do before that, I think. Yeah. All right, there's one more thing I want to show you before that. And this just has to do with a really popular type of income called the Schedule C. So if y'all are looking here, I mentioned that folks are going to have Schedule C. Folks are going to have business income. This is, I think I clicked on an ad by accident. Nope, let's do this one. All right, my computer's struggling a little bit, but it's catching up. All right, it's going to the ad. That's not what we want. We're going back. Okay, cool. All right, so y'all, this is a Schedule C. And for anyone who's self-employed, this is really important. Basically, what it lets you do, and I'll zoom in a little bit so folks in the recording can hopefully see it a little bit bigger and better. I'm zooming, but it's slow. My computer's struggling a bit, y'all, but we'll make it through. So this says profit and loss from business. And basically anyone that has cash income or gets a 1099 miscellaneous is going to need to use one of these forms. Folks will enter their name or their business's name, enter their social security number or the business number. They'll enter the type of profession that it is, and there's like a drop-down list you can pick from in the software. They'll enter the address where they do business, which is just their home address, if they do their business mostly from home, or it'll be a physical location if they have one. Everyone who we're doing taxes for will be cash method, as well as everyone will participate in their business, materially participate as it's called. But the next, this is like a simple form, right? All it says is how much income did you make throughout the whole year that was paid to you. You'll enter that. So let's say someone made $10,000. You just enter that. And then next it's going to ask, what expenses did you have? So did you advertise for your business? The client will say, yeah, I spent $1,000 on advertising. Okay, cool. Next it's going to ask, did you pay any fees? Well, yeah, I had to pay $1,000 to Miami-Dade County. Okay, cool. And taxes and fees and stuff. Cool. Next, I had health insurance, or I had insurance that wasn't health insurance. I had business insurance to protect my liability. That was $2,000. Great. I get to deduct that. I had office expenses where I spent $1,000 on office expenses. I rented some equipment so that I could do my business. Let's say it was like a machine to help me make something. And then the last thing is I traveled a bit this year, $1,000 worth of travel. So this line is going to say add up your total expenses, which is add up lines 8 through 27. So we got 1,000 here, 2,000, 4,000, 5,000, 6,000, 7,000. So we'll see 7,000 here. And now it's just going to say subtract the line 28 from line 7. So your total expenses minus your total income, which I didn't carry down here, but it's $10,000. So that's going to say the difference here is $3,000. And that's what the total profit for these people is. So the big thing here is just when clients come in, they made a little bit of guidance around what their expenses are, what qualifies, what doesn't qualify. So I just say like spend a little bit of time getting to know this form. When we'll get to do a small business tax for someone in one of the scenarios. So you'll get more experience there. But know that for this person, the net profit is they made $2,000 in profit, and they have to pay tax on that $2,000. And it'll go forward to 1040 and all these other things. Whew. Okay. So that's the Schedule C. There is something called the Schedule C EZ, which is like a simpler version of the Schedule C. We don't typically use that form at Vitasites. We typically use the Schedule C, but we try to stick to the standards of the Schedule C EZ. So that only lets you prepare taxes for folks under a certain income. So just kind of know that like we use the Schedule C exclusively, but we use it as if it were a Schedule C EZ in limiting ourselves. All right, cool. All right, this is actually great. We're getting close. We're next going to spend a little bit of time. Okay, next we're going to spend some time doing what we just did for the Schedule C, but for the 1040. So we're going to do a whole fake scenario. And the purpose of this is for you all to learn how to read this 1040 because it'll be really important for you to be able to explain this to clients. So let's dive in. So we're going to do a sample scenario that I've kind of got drafted here. And this is going to be my sample scenario. Actually, do I have this up somewhere else? Let's see. If I do, it will need to fill it out. It would be partially filled out already, and that won't be great. So let's start from scratch and do this. Okay, great. So this is going to be my tax return, Darren Liddell. I'm going to enter my social security number, or a dummy social security number in this case. I'm going to enter the Catalyst Miami address, 2000 Biscayne Boulevard. I'm going to do this in all caps because IRS prefers it that way. LDD. Catalyst Miami Suite 210. Miami, Florida. 33137. Great. So I skipped something actually. The first thing is going to be like, what's my filing status? And in this scenario, I'm going to have a fake child. Her name is going to be Daria. And her social, I'll enter. She's my daughter. She is eligible for the child tax credit. I just know that, but clients may not. The software will help us figure out this stuff. But because of that, I'm going to file head of household. So I'll check this box at the very top of the tax return. And then there's this question about the presidential election campaign fund, which we talked about earlier. It'll show up in the software too, but just know that this, where you would check it on a physical tax return, or where it will show checked if someone does opt into it. So next, we're just in this scenario, I make $30,000. And I have no other types of income. So I read down through this and it basically says wages. I've entered them all. I've got none of this other interest, and everything through line 8 is income. So on line 9, it says add lines 1, 2, 3, 4, 5, 6, 7, and 8, and this is your total income. So my total income is going to be $30,000. And so now it's saying add adjustments to income from Schedule 1, line 26. So let's go look at Schedule 1 and see what's on there and what that means. So Schedule 1 is a place for additional income that doesn't fit on the 1040, as well as some adjustments to income. So we don't have any other types of income. So all this income is blank, but if folks had alimony income or rental income or gambling income or canceled debt, all that stuff can go in here. But under adjustments to income, we do have an adjustment actually. I paid $500 in student loan interest in this example. So that $500 student loan interest is entered here on line 21. And here's the $500. So I have nothing else here, no other adjustments. So this carries down here and we have $500 adjustment to income. So I'm going to go back to this 1040 now. This. Okay, great. So I'm going to go back to the 1040 now, and we're going to enter our total adjustments of 500. Let's do 1,000 just to make the math a little easier. Okay, great. So next it's going to say subtract line 9 from line 10. This is your adjusted gross income. So sometimes folks will ask, how do I get my AGI, or what does that mean? And it's just really your total income minus any adjustments to that income. So next it's going to say, they're going to ask, do you want to take a standard deduction or do the itemized deduction? So the standard deduction is really easy. There's actually a chart here on the left of the tax return that just says what the standard deduction amounts are based on your filing status. So my filing status is head of household. So I would take a standard deduction of $18,800. And the important thing here is the way itemized deductions work is if you basically, for the itemized deduction to be better for you, it needs to be more than your standard deduction. So you can have a bunch of small little things that add up. They all need to add up to be more than 18,800. So that can include, typically people itemize when they have three things going on. They either own a home, they had major medical expenses, like catastrophic medical expenses, like a lot of medical expenses, or they donate a lot to charity. So if you give a lot of your money and it adds up to be more than $18,000, or any combination of those things is true, then you'll be able to itemize. In this day and age, most people can't itemize because this is just a lot of money. It's something like 5 or 6% of people end up itemizing. It's very few people nowadays. So there's another one here, another credit here for donations to charity. So if you donated, this is a new credit that came about. If you donated to charity up to $300 per adult that you're claiming on your taxes, or per person filing. So it's like you and your spouse, basically, you can't claim it for kids, even if they're adults. But let's say I donated $300 to Catalyst Miami. And actually, I'm going to make this simpler and make the math a little easier. I'll say $100. No, I'll say $200 donated to Catalyst Miami. And I'll get a deduction for that. So next, it's going to say add up lines 12A and 12B. So that's going to add up to be $19,000. And then I don't have any qualified business deductions. If I'm adding lines 12 and 13, this is going to be 0. And for this, you can say 0 or you can leave it blank, but I'll put a 0 in here. And then for the next one, it says, what's your taxable income? Subtract line 14 from line 11. So line 14, 12C, I did this math wrong, sorry, y'all. $19,000. So line 12, line 14 from line 11. So 19,000 or 29,000 minus 19,000 equals 10,000. And this is my taxable income. So on the next page, it's going to say, great, how much should you have paid in taxes based on this taxable income? And there actually is a nifty thing called a tax table that tells you how much income you were supposed to pay in taxes. Tax earner credit table. I think we may have to open up a new tab with it because I think I may have closed the old one. I did. Okay, so let's do that. 2021 tax table. Got it. All right, so the way this tax table works is basically based on your filing status, there is a chart. And the chart will say, if you made at least this much income, but not this much income, here's the filing status you're going to use. Or here's how much you'll pay in taxes based on your filing status. So if you're single and made $2,000, you should be paying $201 in taxes every year. So we'll scroll down and see for someone who made $10,000 of taxable income, how much they should have paid. And it looks like if I'm filing head of household, it looks like for $10,000, it actually is $10,003 that I should have paid in taxes over the course of this year. Or sorry, $1,003. So we're gonna go back to the 1040 that we've got open and enter that. But I'm gonna simplify it to just say 1,000, so the math will be a little easier. But normally you would enter the exact amount. So perfect. So then next it's gonna say enter the amount from Schedule 2. And we'll go look at Schedule 2 really quickly, but we're not gonna have anything from it. So we'll mostly just skip it, but I do want y'all to see what is on there. So Schedule 2 is for other types of taxes. So folks that have self-employment tax, or other kind of unique taxes, that's what they would apply and be added here. But we don't have any of those, so we're gonna skip this. And then from there, it looks like we're gonna add line 16 and 17. It's what the instructions say. Boom. All right, non-refundable child tax credit or credit for other dependents. So our child tax credit is going to be refundable. We have one dependent, and their child tax credit is $3,600. In this example, we're assuming I didn't get paid any advanced child tax credit. If I did, it would just be half of this that I'd be getting, but we're just going to assume for simplicity that I didn't receive any. All right, cool. And then same thing, we're not going to need to go reference Schedule C or Schedule 3 because we don't have anything there. So this is going to say add lines 22 and 23. Hold up. Track line 21 from 18. 21 minus 18. 0 minus 1,000 is 1,000. Add lines 22 and 23. And 22. Okay. Okay, great. I'm going to try and change 0. So this is a little easier for me to follow as well. Other taxes, 0. Total tax, which is lines 22 and 23. 22 from 18. Oh, okay. Sorry, y'all. So this is non-refundable 18, 1,000. Add lines 19 and 20. Okay, so actually this should have been 0. Apologies, y'all. Great. So now the total tax is going to be $1,000. And then I had a little bit of money taken out of my W-2. Let's say I made $30,000, so I had $3,000 taken out of my W-2, which is 10%. So because of that, we had no other taxes taken out. This is going to be 3,000. I didn't pay any estimated tax payments, which basically means you thought you would owe, so you pay the IRS early in advance. So I didn't do that, so that's not applicable to me. Let's say I've got a $3,000 earned. Well, let's actually say I have a $5,000 earned income credit. So now I'm not in school. I don't have this American Opportunity Credit. This recovery rebate credit is the stimulus, but I received the whole stimulus as it was paid out to me, so nothing to put there. Nothing from Schedule 3. So it's going to say add up lines 27A and 28 through 31. So that's going to be $3,600 or $8,600. And now it's going to say add lines 25, 26, and 32. So 25, 26, and 32. Total payments is $11,600. So now it just says, take line 24, subtract it from line 33. This is your refund. So 1,000 minus 11, or 11,600 minus 1,000 is just going to be 10,600. And this is the total refund that I would get. So this is the amount of money that I would get back. So I know this is in the details. This is in the weeds, and this is a lot of detail to follow. But I wanted y'all to understand this concept of how the tax return works and how it's really just one big math problem. So that way, if you're talking to a client and they're saying like, so what's happening here? You can pull up the 1040, show them what's happening, help them to understand, and really explain what's happening, what credits they're getting, things that are affecting the refund or the reason that they owe. The last things that I won't put in here are just the account and routing number. I have a space on here, as well as a type of bank account. And then we didn't owe in this example, but if we had, it would have showed up here on line 37. Clients will sign the return at the very bottom. They'll enter the date. If they have an ID theft PIN number, it will show up here on the return. And then they'll sign phone number, email address if they like. And then this will say Catalyst Miami and have our identification numbers listed here, as well as our address. Whew. Okay, it's a lot, y'all. We just went through a whole 1040. So I'm gonna take a second and see if there are any questions. If there are, please feel free to drop them in the chat. And if not, we're gonna take a few minute break. My throat's getting tired from talking. So we're gonna take probably a 5-minute break and plan to come back at one. Let's do 1:50. Yeah. So hi, everybody. Thanks again for continuing with us on this training. We're going to keep going. And so if we just finished completing the 1040 and doing that by hand, so you can understand how that works. Now we're going to go through individual parts of the 1040 and explain what they mean, most popular credits that appear there, with the goal to get through the entirety of the 1040 before we finish the training today. So that way next time we can really just dive into questions and answer questions from folks' homework, and then also show off the tax software that we're going to use. So we'll spend most of the training the next time focusing on doing practice scenarios and answering those questions and going in and doing the certification together. Cool. So with that, I'm going to share my screen again. Let's see. Share the screen, share the screen. Okay, great. So yeah, so we just completed this 1040. And what we're going to look at next basically are these things from this section, this adjustments section and adjustments to gross income. Yeah, I think I closed out the schedule. No, here it is, the schedule 1. So basically, we're going to chat about the things that appear here, adjustments to income. We finished talking about income, but for these adjustments, there are a few important ones that you know about that clients will often have questions about, or they'll indicate on their intake sheet that they have these things. And we'll just go straight down the board with these. If you're looking at the 4012 as well, we're in tab E, which is the adjustments tab. And then tab E is laid out in a really similar way to the schedule 1, where they've got educator expenses at the top, health savings accounts, moving expenses, alimony paid. Then if you go over here and look at schedule 1, you'll see the same thing. You'll see educator expenses, you'll see health savings accounts, you'll see the alimony paid and that kind of thing. So the most popular ones of these. A big one, because many teachers come to VitaSites, is educator expenses. So educator expenses, basically every K through 12 educator that works at least 900 hours each year gets to deduct $250 of classroom expenses, which can be tough because if someone starts teaching late in the year, like September or October, they may not have enough time to get to that 900 hours, but in their second year, they should be able to get to it as long as they're employed the full year. And if there are 2 teachers that are married together, then you can, it's $250 per teacher. So they both could claim this on their joint return and get up to $500. And I'm like walking y'all through this and I'm looking at the form, but if you're actually, we're in tab E, and if you actually scroll down, there is a whole section here about education expenses, educator expenses. So this is teachers paying things out of pocket for their classroom and not being reimbursed for them, which happens all the time. It's so funny. You talk to a teacher about this, they're like, oh yeah, of course I paid a bunch of money to provide stuff for my classroom. And it typically is much more than $250. So all this to say, the maximum benefit is $250. And then again, up to $500 if there are 2 people. Who's an eligible educator? Basically what I said before, you've got to work at a K through 12 institution and be a teacher or a counselor or a principal or an aide, and you've got to work for at least 900 hours. Which expenses qualify? So this is like lots and lots of things, right? But basically it can be books, supplies, equipment, things that any other materials you use in the classroom. I think in the times of COVID, this also applies to things that help you work virtually. And then what are non-qualifying expenses? Things that things that don't count are things for homeschool or for supplies for non-athletic supplies for physical or health education. Cool. So that's just a bit about educator expenses. Then we're going to go back to, excuse me, we're going to go back to the Schedule 1. And the next one that's quite popular is there's a deduction for health savings accounts. There actually is a whole scenario about health savings accounts. So I want to spend a little bit of time talking about this. Because there will be 3 or 4 questions about HSAs in the training. So what is an HSA? A health savings account is an account that lets you put money into a type of savings account, basically, that's designated just for health reasons, health insurance reasons. It's typically tied to something called a high deductible health plan, which basically just means like you have insurance through your job or through somewhere, and as a part of that insurance, you also have an HSA that lets you. You also have an HSA that lets you like set aside money for medical expenses. So, because of the way the HSA works, basically clients will receive a form that says, here's how much was contributed to your HSA by you, by an employer, by a family member. It's just like anyone who contributed to your HSA, here's how much they contributed, and then here's how much was spent from your HSA. And then they basically ask the person doing the taxes to ask you to say, or ask the client to say, how much did you spend on medical expenses that qualified? If all of it was spent on qualifying medical expenses, then the whole HSA thing is not, there's no fee or penalty or anything. But if you use some of it incorrectly, then they want you to put that in your taxes, and a part of it can become taxable. So there's a few questions here about HSAs and things you can ask folks about their HSA contributions and distributions. And then this also talks about how you enter that information in the software, what the different types of plans are. There's a family plan, a self-only plan, and you get a little bit more you can enter if you're someone over 55. This also shows how you will know the taxpayer has an HSA. And the most common one really is folks coming with the W-2 with the code W in the W-2 box, or in like the 12 box for the code for box 12. These other ones are a little bit less common, but can happen. So folks do sometimes have this 5498 SA health insurance form. But basically, anyone who's got an HSA will typically know, and they'll typically bring in this form. And this just teaches you what to enter. This part on page E5 is really important, and it ties into the test question that we're going to be asked about this, that y'all will be assigned for homework. So, if you're taking notes, go ahead and write down page E5 and put -HSA beside it, because this talks about the different types of things that can be covered under an HSA. And there is a question particularly that says this person has these kinds of expenses. Do they all qualify? What qualifies? What doesn't qualify? So that will be helpful there. And then we're done with HSA and we're on to alimony. Excuse me, y'all. So that's HSAs. Alimony is something that's interesting because anyone who's divorced recently won't have to pay alimony, and it won't be tax deductible. It won't be tax deductible for anyone who has received it recently. Anyone who received it before 2019 can get a deduction for it, and may have to pay taxes on it if it's a type of income for them. Okay, cool. So then let's go through to the next tab. See if we're leaving out anything. Alimony, great. Oh, okay. This is actually a great one that I'm glad I didn't miss over. There's 2 other deductions that are quite popular. The IRA deduction, which is basically for folks that are contributing to an IRA, which stands for Individual Retirement Account. And you can contribute up to $6,000 per year to an IRA. So if someone's contributing to an IRA and that's their only form of retirement income, but they don't have any other type of retirement account, they likely can get a tax deduction for it. This is only for traditional IRAs. For folks that have Roth IRAs, it actually isn't deductible. You can enter the amount, but then it'll basically like ask, the software will help you determine the deductibility. But if total, traditional, and Roth contributions exceed the lesser of the total compensation, basically like there are some limitations to these retirement deductions. But the important thing to know is that you can enter up to $6,000, and the software will help you figure out if it's deductible or not. Right. So another popular one on this in this adjustment section, this is probably one of the most popular, is just student loan interest deduction. So for folks that are paying off their student loans, if they pay student loans, they pay student loan interest, you can get a deduction up to $2,500 that will let you reduce reduce your income as an adjustment to income. So it's a nice way to like incentivize a nice way the government rewards folks that are paying their student loans by giving them a little tax deduction. And if you pay more than $2,500 in a year, that's great. If the interest adds to be more than that, that's still great. But you just won't get a deduction for more than that in 1 year. And folks will sometimes ask this question of like, well, should I like wait to pay it off over time? The answer is like, you'll probably save more money if you pay it off as soon as you can. Don't try to like maximize your tax deduction. Like sometimes because you're paying interest and those kind of things over the life of the loan. So it's better to just pay it earlier in many cases. Cool. So to get this, you have to have a student loan, obviously, and you or your spouse has to have been a student at some point, or at least received a student loan if you were, only very, very briefly a student. And this student loan interest deduction comes on a form called a 1098E. So remember, 1098 is for things that you paid, and 1099 is for things that were paid to you. So for this one, as a friendly reminder, you can't get this deduction if you're filing separately. Yeah, or if your family is dependent by someone else. All right, so with that, y'all, there's a notes page, which means we're on to the next section, which is deductions. And deductions are, let's see, this part of the 1040. Where did the 1040 go? Here it is. Okay. So there's a few deductions here. Yeah, there's a few deductions here. And then there's a few more a bit further down in the 1040. But we're just going to go through the most popular ones now. And all of these things we're talking through, y'all, are things that are many, many, many of them are going to pop up in the certification exam. So this is just kind of like the education portion so that when you get ready to answer those questions, you'll feel and know enough to like hopefully be able to answer them. Cool. So 4012. Let's talk deductions. Let's see. So the most popular deduction is the standard deduction, which we talked about already. Basically, based on your filing status, you get a certain amount that you can deduct. This is also located in the sidebar of the 1040. So all those amounts here, these are the standard deduction amounts. This is just another chart that shows it in a nice, easy to consume way in this book. And of course, it varies based on the status that you have, with married filing jointly and qualifying widower being the highest. Head of household being the next highest, which is the highest as a single person. And then the last one is single or married filing separately, which are the lowest. All right, there are some situations where folks are not eligible for a standard deduction, but it's quite rare. So, it typically is for folks that are doing married filing separately and their spouse itemizes, they may have to forego their standard deduction. But beyond that, there are not many situations where that would be true in our cases at VITA. The one thing I will say is your standard deduction is typically those numbers in this chart above that we looked at. It's almost always this, but there are two situations where it can be more than that. And those two situations are basically described in this chart. One is if you're born before 1957, you get a little bit of an increase in your standard deduction, or if you're blind, or if your spouse is born before 1957 or blind. So how much does that turn out to be extra? If you're filing single, if you're older than 1957, or if you're born before 1957, you'll get 14,000, which was I think closer to 12,500. So you get almost $2,000 more standard deduction. And then you get a little bit more than that if you're also blind. And then it increases, it continues to increase more and more depending on your filing status. So basically it helps folks get a little bit more money back if either of those things are true. Cool. So I talked to y'all about itemized deductions before when we were going through the 1040. And this kind of interview sheet just helps you talk to a client around whether they're able to itemize or not. So a client may say sometime like, I'm not sure if I want to itemize. I've done it in the past, but I don't know if it applies this year. Can you help me to figure it out? And these questions will help you help that client to understand whether they can or not. So in the software, you also can enter all of the expenses, and then the software will tell you whether they qualify or not and what's the best thing for them, standard or itemized. But you typically, sometimes, very, very often, you can eyeball to get a feel of what's better for the client. So if the client lives in a home and had major medical expenses last year and donated to charity, it's very likely they may be able to itemize. If you can look at their forms and see, oh, okay, well, your standard deduction is 18,000. Looks like I'm eyeballing it. Looks like you got at least $20,000 of expenses. Cool. Let's go ahead and explore this. Or like $15,000 even. If it's like kind of close, like feel free to like just kind of enter it just to see. But if it's something like, they've got $5,000 of expenses and itemizations, then they're never going to meet the standard. Won't get to be close enough. All right, cool. So more questions here. They all highlight that those three topics that I talked about of medical expenses, owning a home, or donations to charity. Yeah, that's basically the way itemizations work. We'll keep going here. Talk about a few other deductions as well. Okay. So there's one more. So if folks are itemizing, we should actually get into what the most common types are. And I've mentioned this before, but these just give you previews of what the software shows. So if someone has home mortgage interest, this is how you'd enter it, and this shows you how to enter it. If someone has gifts to charity, this shows you how to enter it. You typically need the name of the organization and the amount the person donated, and possibly a date to tie to that donation. So you'll see that here: charity name, description, donation description, and then amount donated. And then there's this other category of like miscellaneous deductions. And this is just like other things that sometimes apply. So an example of that would be gambling losses. There's something I've talked about earlier that is deductible. But it's deductible only as an itemized deduction. So, you put it here and you can only deduct your losses up to your winnings. So if you win $1,000 at the casino, but you lose 2,000, you can only deduct up to 1,000 because it can only match your winnings. Cool. Or it can't be greater than your winnings, I guess is what I should say. There's another. There's another deduction for qualified business owners. Basically, this will calculate automatically. So, plan on this calculating automatically. It will do it on its own. The software will take care of this based on everything else that you enter. And with that, we're done with deductions and on to non-refundable credits. So there's two types of tax credits, refundable and non-refundable. So typically, non-refundable credits mean it can't give you a bigger refund. A refundable credit means it can increase your refund and give you a bigger paycheck, a bigger refund from the taxes. So most people really, really like those refundable credits because they help you get more money. And folks really don't typically folks like non-refundable credits because they reduce what you owe. So if you've got a credit that's non-refundable that takes the amount that you owe to zero, it means you can get more of a refundable credit and a bigger tax refund in the end. So what are the most common types of non-refundable credits? We're going to go through these real quickly. And I know this is a lot of information, y'all, so don't worry. When you're taking the test, the thing to remember is they're asking about a tax credit. Let me go to the book, look at these different types of tax credits, and then there'll be different descriptors to tell me a bit more about them. So like the refundable child tax credit, we'll talk about. Additional child tax credit, we'll talk about. Well, basically, I want you all to just basically know you can go in here, look for these answers. It'll give you some guidance, and then you'll know where to look and go and find some of these things. So keeping that in mind, so non-refundable credits, the foreign tax credit is a credit that applies to folks that earn income that is from a foreign investment typically. So let's say you like Nintendo. So you bought a Nintendo stock, and Nintendo is based in Japan. So you bought, you got this stock, the stock pays out a little bit of dividend, it pays out a little bit of money to you, and you've got to pay taxes on that to the Japanese government. All this happened behind the scenes with your investment. So you just get a statement that says, hey, I paid this much in foreign taxes. All those foreign taxes will be deductible as a credit that you can claim on your taxes. That's the short answer. It's just know that if someone comes in with an investment form for some foreign investment, it may be deductible. Another example would be like a BMW stock or something like that. A company that's like very famously foreign, and someone has invested in them most typically. So there also is, I'm actually going to go through these a little bit in the order that they're in. So the child tax credit, this is a really, really, really big deal this year. So for the first time ever in the history of the child tax credit was refundable as an advanced credit, which means that people got this child tax credit before they filed taxes. So folks who have children have been getting this credit since January of 2021 through December of 2021. And then for now, it stopped. It may continue in the future, but for now, it stopped. But so for those 6 months, folks got half of their child tax credit. So they got $250 to $300 payments every month for per child that they have in their household, to use however they would like to take care of their kids and provide for them and that kind of thing. So, so you may be thinking like, okay, folks got that monthly payment amount through July or through December. What happens now? So what ends up happening now is folks need to file taxes to get the second half of their child tax credit. So this will be a popular one. It should, more people than ever will need to do taxes, I would imagine, so they can get the second half of this credit. And it should be between $1,500 and $1,800 per child that's claimed on the tax return. So it has the potential to increase refunds a little bit. The old child tax credit, you couldn't get it in advance. It only was $1,400. So it's basically doubled and you get part of it in advance. So some folks are kind of like, oh, my refund go down, so I got this advance payment. In most cases, the answer should be no. Like most people should see either a little bit higher refund or a similar refund, assuming everything else stays the same. So how do you qualify as a qualifying child for the child tax credit? Basically, you have to be 17 or under at the end of the year. So December 31st, 11 p.m. If your child turned 18 before, then they don't qualify. And if they were if they turned 17 on January 1st, you still get to claim them for this last year. They must be a U.S. citizen or a resident alien, basically. So have a green card or like be allowed to be here illegally. The child must be claimed as your dependent, and they must be some descendant of yours. The child must not have provided more than half of their own support, which sounds a lot like what we were talking about earlier. They also must have lived with the taxpayer for more than half the year, and they must have a social security number that's valid for employment, even though they're likely too young to be working. Okay, so that was a lot about the child tax credit. Those are the most important things for y'all to know. If there are any questions, y'all, please stop me or please put in the chat. I like having looked at the chat. So actually, let me take a second to make sure there's nothing there. Great, there's not. Cool. Well, if y'all have questions, please chat them up. Clients will be asking a lot about the child tax credit this year and how it all works. So I'll stress again that it's really important to understand these concepts so that when a client asks, you can say you got half of your child tax credit in advance from July through December, and you'll get the rest of it now that we're doing your taxes. Or if folks didn't get any payment that they were supposed to get that just never came to them, they can get the whole thing now when we file taxes. Cool. So continuing to go through, y'all. We're doing great. This is good. We're flowing through this training. And child tax credit, credit other dependent. So alternatively, if someone is able to qualify as a qualifying child, they'll get this child tax credit. If they're not, they'll get something called the credit for other dependents. And basically, this credit is a $500 credit that you get for each person that you claim on your taxes that's either too old to be a child or doesn't qualify for one of the other reasons. And so in your mind, you're probably thinking like, wait, so the child tax credit is $3,600 max. The other credit for other dependents is $500 max. This doesn't seem to be the same. And that's true. Like credit for other dependents is not as big as child tax credit. It's just not, and you can get it in advance. And like, it basically is like a less good credit if you're comparing the two directly. But so just kind of know that this really will affect people with older dependents. So like if you've got a child who lives with you who's over 19 and isn't a full-time student, they'll qualify for this. If you're caring for a dependent parent, they'll qualify for this. It basically means that like once you stop being able to claim them as a child, you get a lot less help. Or the amount of money that you get for them is less. Cool. So we already talked about credit for other dependents. We talked about foreign tax credit, and there's a sheet here. There's a kind of a demonstration here about enter that in the tax software. All right, another big credit that's quite popular because daycare expenses are super expensive is the child and dependent care credit. So basically what this credit does is it makes it so that if your child is in daycare, either before or after care, so that you can work or look for work even. You don't have to be working, but if you're looking for work and putting your child in daycare or after care, you can basically get a tax deduction for that as long as your child is under the age of 18. Or if they're not able to care for themselves, like they have a disability of some kind, you can take advantage of this tax credit. And this is a credit that actually was expanded this year because of the coronavirus pandemic and some tax law changes that the Biden administration pushed through, where for the first time in a very long time, or maybe the first time ever, this is a refundable credit. So you can get this paying for dependent care can increase your refund, which is really nice, and should be like a nice thing for those that are paying for daycare for their kids or other dependents. So, and then these charts just help you determine whether someone is eligible to get it. The thing that you'll need from folks to do this is you'll typically need the name of the educational institution where the child or dependent was enrolled. You'll need their EIN number, which is their business number that's associated with their tax return. And then you'll need the amount that you paid and the period of time that the kids were enrolled at that organization. Yeah, so just kind of know that those things will be needed. And then in one of the scenarios, we'll see they've got like a demo version of like what it likely would look like. Yeah, I can show you all very quickly. Yeah, what that looks like. It should be in this next scenario. Sometimes for visual folks, I know it can be really nice to see a visual thing. So that's what we're going to look at. And don't be scared by these forms you're seeing. They may seem scary, but they're really not bad. All right, here it is. Busy Bee Daycare. It's always Busy Bee. So this will just say like, hey, for the end of the year, this person paid this much for this child. Here's our EIN number. Here's our address. You can call us if you need more information. In some states, you have to enter the organization's phone number, but Florida isn't one, so kind of disregard that. Cool. All right, so flowing through this. There's a few more that I'm going to highlight for you all before we finish moving on. There's something called the Retirement Savings Contribution Credit. I know this is becoming a lot. Like I know you're like, whoa, there's so many credits. What's going on? It's okay. You'll get a chance to these will become real to you as the answer to the questions about them, and you'll refer to some of this information I'm talking about when we're doing it then. So the Retirement Savers Contribution Credit. This is basically a credit for folks that make less than $33,000 if they're single, or a little bit more if they're filing head of household or merely filing jointly. But basically, it just incentivizes you to save for retirement. It gives you a bit more money back on your tax return, or reduces your liability if you're contributing to retirement and your income is underneath that. So nice little bonus and a thank you for folks that contribute to retirement. There's something called the credit for the elderly and disabled, and this is a credit for older folks. That actually typically happens automatically in the software. So there's not much to do other than know that if someone asks like, hey, I'm a little bit older, what are the advantages for me filing taxes? And this is one of them. And same thing for disabled folks as well. All right. So we're getting down to the home stretch. Tab H, which is focused on other taxes, payments, and refundable credits. So there's a few specific credits we're going to talk about here. Most of these, so you'll see in this tax section, much of this actually is out of scope. Self-employment tax calculates automatically. Unreported tip income and early distribution stuff. Y'all don't have to worry about too much, but just know that many of these more advanced concepts are out of scope for us to do. And then we're going to skip ahead to estimated tax payments, which I've talked about, which is if someone pays taxes in advance thinking they will owe, You can enter that in the software and they'll get credit for it. The premium tax credit, this is one for folks that receive health insurance through the healthcare.gov, or this is also kind of informally known as Obamacare. So folks have Obamacare health insurance through the healthcare marketplace. They'll get this form called 1095A. It will say, here's how much you paid, here's your information, here's how much you paid in insurance each month, here's how much of a health subsidy we gave you, and you need to put that into their tax return for them to have a complete and accurate return. If we send it without it, IRS will basically send them a note later that says, hey, you left this off. Can you please update this information? Oh, this is neat. So this is just telling you more about how you can use healthcare.gov to make sure folks are doing their taxes correctly. All right, so the next one is a big one, the earned income credit. So this credit, folks call this credit one of the best anti-poverty tools that exist out there. It basically is something that helps low-income families and individuals to get a bigger tax refund and use that money to live, to survive, to thrive. The best example of this I can give is I've had clients come in where they made like $20,000 a year. They had 3 dependents, and then we did their taxes and they got like a $10,000 or $11,000 or $12,000 tax refund. And a lot of that tax refund they got was this earned income credit that basically rewards you for working and gives you like can give you a larger refund if you do it correctly. So what is earned income? Like that's what this table is about. So we're on page I1, and this is just a really simple breakdown of like what's earned income. Earned income is wages. It's things that you earn basically. If you do work and you make money and you earn income because you did a service or did a thing, then that is included in earned income. And things that are not earned income are things that you didn't do active work to do. So like Social Security is one. You get Social Security money, you paid into the system, but you didn't like work to get that benefit. Same thing for interest and dividends. It's like money that makes money for you. Alimony, child support, unemployment compensation, some retirement money. Like these are all things that are investments or a different type of product, and they can grow and change. So the important thing to know is that they're not earned income and they won't qualify you for this earned income credit. You basically have to work to qualify for this earned income credit. All right, so there's a few important rules to know, and this chart is one to kind of bookmark. This chart on I2 will be really helpful as you're answering some of the test scenario questions. So it has the rules for everyone. So in order to get the earned income credit, a taxpayer must have qualifying children that have Social Security numbers. The taxpayer's filing status can't be married, filing separately unless they unless there's like an exception. Basically, you typically can't get this unless it's married if you file married filing separately. You have to be a U.S. citizen. You can't have foreign earned income, which is what this form 255 is. You can't have investment income over $10,000. And you can't be an investment income is like when you sell an investment. It's not about having the investment. It's like, did you sell it and make more than $10,000? And you can't be the qualifying child of another person. So if all of that is true, there's these other two charts where if you have a qualifying child, these things must be true. If you don't have a qualifying child, these things must be true. So if you have a qualifying child, basically you have to be able to claim the child, and they have to meet all those tests we talk about around age, relationship, residency. Do they live with you? Are they young enough? Are they related to you? Are they not filing taxes with someone else? The qualifying child can't be used by more than one person, which makes sense. Only one person can claim someone, so that fully makes sense. And the taxpayer can't be the qualifying child of another person. So again, that may seem obvious, but just pointing it out there. So the next column is for folks that don't have qualifying children. So they must be at least age 19. So you can't claim earned income credit if you're under 19. You can't be the dependent of another person. You have to live in the US for more than half the year. And you can't be the qualifying child of another person. The last thing here is there are some income limits for the earned income credit. So once you start making more than this, you can no longer qualify for the credit. So if you've got 3 kids, the amount is $51,000. If you've got 2 kids, the amount is $47,000. If you've got 1 child, the amount is is, if you don't, sorry, if you have one child, it's 42, and if you have no children, the amount is 21,000. Which may not seem like a lot, and it's not a lot, but it actually is bigger than it's ever been. Before, this number used to be 14,000. So the fact that it's 21 now means that more people will qualify for this credit, and more single people can get it than ever before, which is a good thing. Cool. So then there's some rules about earned income credit. This is another one of those interview charts you can use to make sure you understand it and you're asking clients the right question to make sure if they qualify for it. These kind of things are really, really useful when you take the exams. There's more of these. There's some reasons for this credit not to be allowed. All right, so next we're going to chat about education benefits. And we're getting close, y'all. Let's see. Yeah, we're getting close. We're almost done. And y'all all right, we're going to just power through so we can try to get out of here a little bit early. But so education benefits and credits are some of the biggest benefits that folks often look forward to. This chart is sideways. I guess I can. No, that didn't work. And now I'm not on the right page. So if this is any indication, y'all, we are all the way here. So tab J out of tab in, but we're actually not going to go through some of them. We'll go through them live in the software. So we're getting quite close to the end. We're almost at finishing the return, which is great. Okay, now it's not taking me where I want to go. All right, perfect. So we're back at this chart, and this chart has a list of all of the different types of education benefits that are available. So scholarships, fellowships, and grants, American Opportunity Credit, Lifetime Learning Credit, student loan interest deduction, which we talked about earlier, and then a few other things as well that are a bit less common to Vida. But I'm going to keep going here and show y'all this chart. So this chart has the two most popular types of education credits for folks that are in college. If you're in college or you've got a student in college you're claiming on your taxes, you're going to receive a form called a 1098-T. And this 1098-T is really to help you know how much tuition was paid over the last year and how much education expenses are eligible for you to claim from your student on your tax return, whether you're the student or they're the student. So the difference between these two credits is, and I'll read through these very briefly, but the American Opportunity Credit is a refundable credit, meaning it can increase your refund. Lifetime Learning Credit is not. There's a limit to how long you can claim the American Opportunity Credit. You can only claim this for 4 years. So only 4 years per eligible student. And then after those 4 years, you're out. And this can be a little awkward because folks typically start school in the fall semester, and that counts as year one. So then you get it for sophomore year, junior year, and then half of senior year, and then the second half of senior year, you don't get it. From there, you could claim the lifetime learning credit. So this credit basically gives you $2,500 per student. So let's say you have 3 students that are in school. They all are getting undergraduate degrees, so they qualify for this American Opportunity Credit. If you're paying tuition for all them or helping them all to pay tuition, you would be able to get $7,500 in eligible educational deduction for this American Opportunity Credit because it's per student. Versus if you only did this lifetime learning credit, it would be $2,000 per return. So you would miss out on claiming those deductions for some of those students because you would hit the max and then not be able to claim anymore. The only other exceptions that I'll say is for the lifetime learning credit, you don't have to be you don't have to be a full-time student, but for the American Opportunity Credit, you do have to be a full-time student. It says you must be at least half-time. You cannot have a felony drug conviction and get the American Opportunity Credit. So we typically have to ask folks this while we're doing taxes for them. We'll have to say something like, hey, so heads up, we are filing taxes. Sorry, the tax office is asking us to qualify you for this credit. They're asking if you've got a felony drug conviction, and you just ask the client. They'll say like, no, I don't, or actually I do, and then we'll say, okay, great. We'll document it in the software. And if they have a felony drug conviction, they won't get this American Opportunity Credit, but they can get this lifetime learning credit. Now you may be like, so why is that? Like, what's the reason for that? That didn't make any sense, and you're not wrong. A lot of tax law is a U.S. senator or someone who made this law or lobbied for this law decided they didn't want folks with felony drug convictions to get it. Is it like fair and equitable? No, it's definitely not. That's just kind of the way a lot of the tax code is designed, unfortunately, where Someone made a decision and it's just stuck. Maybe the law will change in the future. Cool. So with that, one more thing that I'll highlight for the American Opportunity Credit. For this credit in particular, you need to have the EIN number from the school. So the schools are going to send a form called a 1098T. We'll enter that in a form 8863. Both these will happen in the software, so it'll be quite easy, but just know that folks will bring this form with them when it applies to them very often. The exception will be for lifetime learning credit. Like, let's say if someone takes classes at Miami-Dade College and it's not for a degree, then they may not receive one of these because it could be for a continuing education course. So they just need to know how much money they paid, and then we can include it in the tax return. Okay. So this is about who can claim education credits. And this shows you how to enter it in the software. So that, y'all, we're almost done with a lot of this tax law stuff. So we can really dive in this next time and focus on answering questions, doing the returns, getting all the questions correct, and getting y'all certified. I actually think I'm gonna, okay, I'm gonna talk a little bit about serving folks and the populations that we'll typically see at the site before we go into these exercises and kind of wrap up for the day. So, and I'll just pause the sharing actually. I think, yeah, it'll just kind of look at me for a bit. So just want to kind of explain a few different things. And I've given a few examples of this when I've been going through the training today, but an example of, so I want to prepare y'all for like the clients that we'll serve. Like many of our clients have been coming to us to do taxes with us for many years. So they typically know the process and may not be used to doing it virtually, but have done taxes with VITA before. They, are ready to get their taxes done. They want it to be quick. They want it to be efficient. But they're also very patient, understand that the taxes are being prepared by volunteers. You've got to watch out for some like Miami colloquialisms, like folks being like, this is my husband, even though they're not married to them, or this is my wife, but they're just partnered together. Legal status is really important. I'm trying to think if there are any other like random examples. The other things that like might relate to Miami is people travel out of the country often and like, may live in the US for part of the year or not part of the year. There are things there are questions in the intake that'll help answer that question of, are folks, folks out of the country for part of the year and that kind of thing. There's the language thing, which is obviously quite big in Miami, is that, like obviously folks speak many languages, right? Like we're all familiar with Spanish and Asian Creole a little bit, but we may not be fluent enough to talk to a client. Something the intake preparers try to do is match Spanish-speaking clients with Spanish-speaking preparers, but it doesn't always happen that way. And in the instances where it doesn't happen, IRS provides something called over-the-phone interpretation or OPI services, where you can call in, have a live interpreter, you'll ask the question to the client, the interpreter will interpret it, and then you'll go back and forth that way through this service. Just note that's available, and we'll teach y'all a little bit about that in the January 20th training. And then the last things are, typically we try to promote tax time savings and like just like getting folks to talk with financial coaches and have goals and work towards achieving their financial goals that they want to. So we have some questions at the end of the tax return that ask folks about if they're interested in talking to a financial coach, if they know what other services Catalyst Miami offers. This is just a chance for us to like make sure folks are getting all the services they can and maximizing the resources available to them. We also use a software called Get Your Refund, and this software is where clients will upload all of their documents. We're going to go through that software on the January 20th training. Maybe before if it's ready, but we'll definitely spend a good bit of time going through that then. Y'all will get a chance to upload documents and take a look and see how see how it all works. And we'll show how the documents display. And you'll see a lot of this when you're doing taxes, because with each client, you'll have to log into this software and tax preparation software to see all the information. Whew. All right, y'all. So we're getting close to to wrapping for the day. I think we're actually a little bit ahead of schedule, which is great. Something that I want to do for the folks on the recording is I'm going to give a homework assignment, and then we're going to go through this at the beginning of the next class, where we're going to take a look at the first 14 questions of the advanced exam. We'll go through them together, answer all the questions, but the homework assignment for you is, let's see, I'll share my screen so y'all can see what it's supposed to look like. Nope, that's it. Okay. All right, so sharing the screen. Let this go away. 1 second. Okay. 4012. Okay, so back to the test book. So what you all are going to do for homework is you're going to go through these advanced scenarios. So starting on page 76, or 74 if you're looking at like the physical copy of the book, is advanced scenario number 1. And we actually answered this one already, but we haven't done advanced scenarios 2 through 14. So for homework, you all are to use the resources you've just learned about today, do your best to get these answers, and then come back. And one of the first things we'll do is answer these questions, go through them together, and work on completing the certification. And then from there, we'll spend the rest of our time focusing on these more advanced scenarios where we'll get to practice entering information for some fake clients. We'll look at their fake intake sheets and see what they say and all the documents that they have. And then we'll look at their fake tax forms and really just put this all in and get some practice doing physical tax returns so that y'all are prepared and feel confident doing that. We'll do one where we show you how to do it, and then we'll do another where you get a chance to do it on your own and then come back and we'll discuss the answers and everything. All right, everybody. So for those on the recording, I'm going to go ahead and wrap the session for today. I hope this has been helpful to you and you've learned a lot. I know this is a lot to consume, so please be kind to yourself. Go for a long walk, get something nice to eat, go drink a cup of water, do something that's going to like relax your brain so you can take this all in and get a lot of sleep tonight. So you absorb it, and we'll continue the training in the next class in about a week or so. Kay, if you can hang out for a little bit, I will like go through a few more things, and then I'm going to stop the recording now. Thanks, everybody.